Okay, ladies and gentlemen, for now we will go ahead. I am going to be doing the next point, point number 16. What is that? Special cases of cost of acquisition. Those cases where cost of acquisition is not going to be easily and readily available. You will have to put effort to determine your cost of acquisition. We started with uh, a couple of easy ones because we did not have time over there, but then we have done the most complicated ones like cost to the previous owner, FMV option. We have completed a lot of complicated cases. We are left with only a couple of special cases of cost of acquisition. One, we have section 51, forfeiture of advance, token, earnest. These are the various names which ICAI uses. Just like in slum sale, ICAI uses sale of business or sale of unit or sale of undertaking. Here they use various names like advance money, token money, earnest money. For calling the same thing, they use different terminology. Forfeiture of this money in a failed property transaction. Forfeiture of advance money in a failed property transaction. First of all, you should understand what is forfeiture of token. If you want to buy a property, you don't keep the full amount of the property in your pocket to go and do the deal. Supposingly you like a property of 5 crore, you will maybe pay an advance, a token called 5 lakh rupees. On an understanding that I will pay you the balance within 2 months and after 2 months you give me the possession. Of course, this part payment and 2 months ka time is basically the market system. It generally also depends on buyer and seller requirement. Seller can say, I need money immediately, otherwise I am not doing the deal. I don't have 2 months. Buyer can say, I want house immediately, money is ready. If you are giving immediately, then I am doing the deal. Sometimes it also depends on the urgency level. But general system is small payment and 2 months for balance. What is the legal significance of this token? We've all heard about this token in practical life for doing any kind of property deal. This happens in rental deals also. But this chapter is not about rentals. This chapter is about sale of property. So we are talking about a token received for selling your property. There is legal implication of this token. The legal implication is that once the seller receives the token, now the seller cannot sell the property to anybody else. Even if he is getting higher value, it's a commitment. Second, a duty on the buyer also. Duty number 1 and the most important duty, pay the balance within the mutually decided time. If you have paid 5 lakh, so there is still balance of 4 crore 95 lakh. We have given you time of 2 months. Within that 2 month time, please pay your balance of 4 crore 95 lakh. Whenever a token is taken in a property deal, Mitro, whenever a token is taken in a property deal, the seller and buyer both have duties. If the buyer fails to pay the balance within the time, this is very important because this will trigger the concept. If the buyer fails to pay the balance within the stipulated time, seller, now can he sell it to anybody? Yes, and more importantly, he can forfeit the token. The seller will keep the money and not give it back to you. The seller is legally allowed to forfeit the token. Again, here also it depends on mutual relations. If the buyer and seller share good relations between each other, if there is a good mediator, you can request that, sir, please understand there is some genuine problem. If the person is good, he may probably return also. But we are talking a case where the seller has not returned your token because of your fault is yours. Sir. Buyer did not pay the balance within the stipulated time. Correct? Eh? You understood the meaning of forfeiture? Is this a sudden profit from nowhere for the seller? Property is still with him and he has got the token money free of cost. What will be the tax treatment of this token is what we are discussing in point number 16. The tax treatment of this token up to previous year 13-14, which means assessment year 14-15 was different. When Jaitley became the finance minister, his first budget was 2014 budget, Modi government first, 2014. In his very first budget, Jaitley amended this rule and the amendment was applicable with effect from previous year 14-15. That is obviously the first assessment year of Modi government, assessment year 1516. So this is the old law of token and this is the new law of token. Of course, I am going to be discussing with you both the old as well as the new law. But my first question to you is, have you understood the meaning of the forfeited token? A token which is forfeited because the buyer did not pay the balance. Is the seller getting sudden profit out of nowhere? Come on, 5 lakh rupees in our example. This token that the seller has received was not going to be taxable immediately. The moment you receive your token, you don't have to pay your tax. No need to pay any tax upon forfeiture of token. See, wow, further benefit. Think about it as a seller. You've got rupees 5 lakh. Your property is still with you. Deal is cancelled. 5 lakh is yours. And you don't have to pay tax also. No need to pay tax immediately. But is it possible that this property is sold in future? Now will there be capital gain? Maybe in future he gets a better buyer who is paying the full amount within the time. Is there capital gain? Will there be sale consideration? That will be the actual amount paid by the new buyer. What do we subtract from the sale consideration to get our capital gain? Cost of acquisition. Now listen, here we will be taking the actual cost, which can of course be cost to the previous owner also. It can be fair market value on 1401 also, based on all the concepts, minus the token that was forfeited by assessee, minus the token that was forfeited by assessee. Means, are we reducing your forfeited token in your cost of acquisition? Will we with this be able to reduce your cost, and therefore we will be able to increase your capital gain by reducing your cost of acquisition? And that means indirectly, are we taking tax on your forfeited token? Let me put it this way. The token was not taxable when it was forfeited. It was taxable in case of future sale. Not by adding in the gain, but by reducing in the cost, which is indirectly increasing the gain. Means, ultimately, is the token being brought to tax by reducing from the cost price in the year of ultimate sale. So the chronology was, supposingly in 0102 I have purchased my property. In 5/6 I forfeit the token. In 5/6 I don't have to pay tax. In 12/13 I sell the property. So capital gain will come in 12/13. In 12/13 I will take sale consideration. And in 12/13 I will take my cost of 0102 minus my forfeiture of 5/6. That amount which is forfeited will be eliminated from my cost of acquisition forever altogether, was the tax treatment. So ultimately the token was taxable, but in the year of sale, not in the year of forfeiture. Is that clear, everyone? But this existing law had a big loophole, a big mistake, which was resulting in tax evasions, manipulations, and it is we chartered accountants who were identifying those manipulations. The word used here was forfeiture by assessee, and they have not written assessee or previous owner. If you have forfeited and you sell it, then it will be minus. If you forfeit and you don't sell it, there won't be capital gain. That means that token won't be taxed unless and until there is capital gain. Because when is the token getting taxed? Not when you forfeit, but when the capital gain is happening, ultimate sale. But if I don't sell only, that won't happen. One day that owner dies, property will go to. Can the legal heir now sell the asset? Sale consideration actual. Cost of acquisition, cost to the previous owner, minus, no minus, because it was not forfeited by the assessee. It was forfeited by the previous owner. It was a big loophole. And how it was used for tax manipulation, I will tell you that also. So that you know why Jetli ji brought the amendment in 2014 ka budget. Understand. I buy a property, and you know, a traditional, our old generation, our grandparents' ka generation is sometimes adamant about the property that they have acquired. They will not let you sell the property. You know, you will have grandparents who will say, I will die, but I will not let you sell this property. This property is of no use. It is rotting. It is getting spoiled day by day. It is no longer an appreciating asset. It has become a depreciating asset. But they will not let you sell your old properties. Supposingly they have purchased the property. That is cost of acquisition, year of acquisition. Some years later, they have forfeited the token. No tax, no tax, no tax in the year of forfeiture, no tax. Tax will come when? Future sale. But they are not going to sell it. Not going to sell it. There are some people who say that I will die, but I will not let you sell the property. I will let you sell the property only after I die. Is the clear instruction they give to their legal heir. In my lifetime, I will not sell it. That means during their lifetime, property did not get sold. Capital gain did not take place only. So this indirect taxation will not take place. Now the property will go to legal heir. Correct hai? Legal heir can sell the property immediately also. But this will not happen, no. Because this was done by previous owner, not by the current assessor. And therefore, that token that was forfeited by the previous owner is going untaxed forever. No one is paying tax on it. You understood? Already a loophole. And this was used for manipulation also. First of all, I will identify one family property which I am mentally sure that I will never sell. I will die, but I will not sell. Identify such a property. My next step is approach people in the market, especially salaried employees, because they get all their payments by check. So you supposedly have 50 lakh rupees in your bank account, tax paid money. I tell you to give me that 50 lakh as token for my property. Please understand the manipulation. I am explaining the manipulation, the logic, not the law, not the exam. So I won't take too much effort in this. Understand in one go. 50 lakh rupees I am requesting for a token. To which her reaction is, Arey sir, I don't want your property. Why I should give token? Arey, don't worry, I will give you 52 lakh cash. Give me 50 lakh check token. I will give you 52 lakh cash. So are you happy with that 2 extra lakh? You are so happy you are getting a profit. And I will show that token forfeited. I don't have to pay tax on 50 lakhs. Correct? Eh? If I would have to pay tax, it would have been 30%. So 2 lakh rupees is a worthy cost of it. She is also happy she got extra 2 lakh rupees. And I am sure that in my lifetime I will not sell. Because by chance, if my lifetime I sell the property, then the token will be minus in the cost. No, I will die, but I will not sell. Take tokens for those properties which you are sure of not selling in your lifetime. Now I die. She has all her plans ready. So now I die. Now the property will go to. Even if the legal head sells on the very next day, no. The token that I forfeited is not going to be taxable. This will go lifetime untaxed. You understood? People were using this for conversion of their. It is inappropriate to say black to white because I am not a racist. But that is what is the common terminology across. To convert your concealed income into declared income, maybe. Or as the popular terminology goes, to convert black to white by paying a small nominal amount of 2 lakh rupees, if you understand. At 3-4% also people used to agree. Bro, 2 lakh rupees is too high. I would have told her 50,000 extra I give. No, she is like extra. Yaar. For safety, she maximum say first give cash, then I will give check. No, okay, no problem. I trust you. I'll give you cash. Do you understand? This Jetli ji came to know. The people are taking token on properties that they are not going to sell. And if they don't sell, so this will never get activated. Sorry. If they don't sell, so this will never get activated only. Jetli ji said, but the forfeited token will be taxable under section 56, that is IFOS, that very bloody moment. We don't know about the future. You forfeited the token, pay tax right now. It is IFOS. You know what? I will be doing IFOS immediately after. There are only 2 lectures away from capital gain. Today and tomorrow, mostly we'll finish everything there. Okay, day after tomorrow, we are 100% doing IFOS. And in IFOS, I am not going to explain. I will just make you write one line. Advance money, token money forfeited from 1415 onwards equal to IFOS. 1415, this amendment. Taxable as IFOS immediately. We don't know about the future. We don't know whether you will sell the property in your lifetime, you will not sell. If here there was a word previous owner, then things would have been easy. We want to keep it simple. You forfeit. Is that profit right now? Pay tax right now. To hell with the future. Simple. The moment you forfeit the token, pay tax immediately. Obviously, now that you have paid tax in IFOS, so that means, can I say, now we will not subtract this token from your whenever you sell in future. Now, if I forfeit token and I have paid tax, then why will I adjust my cost of acquisition? Correct? Hai? Do you realize now the tax treatment is so simple? Earlier, you had to actually keep a memory of the year of forfeiture and then the year of future sale. Now, you don't have to do that. Forfeit and pay tax, and cost will remain cost without any change. Very easy. And this rule changed like what? 10 years ago, 11 years ago? PY 14-15? First budget of Jetli government, first budget of Modi government. And sir has gone crazy. Sir, 11 years ago, we were in school. 11 years ago, you were in school, no? Bro, you were in school 3 years ago. Most of you all. No. This is the graduates who were not in school 3 years ago. The foundation people were in school only 3 years ago. And the graduates, are the super smart people, according to whom, Arey sir, accounts, costing, FM, direct tax, indirect tax. Oh, I have studied all this in my BCom exam. Fantastic. So, CA inter equal to BCom. In tax mein to I have proved it is not. And other subjects? Nahi na? To bro, 11 years ago the law has changed. And it has rather become very simple. Just pay tax and don't adjust your cost. Immediately taxable, no need to adjust in cost. Do you realize now there is no capital gain effect on it? The effect is in IFOI. Sir, then why are you teaching this old outdated law to us? This law for all purposes is now absolutely useless. Yes or no? No! No. If forfeited up to 13-14, but by the current owner, by the assessee, because previous owner ka forfeiture was getting untaxed, that is the reason amendment came. Then that you will reduce from COA. Even now, Mitro, even now you will reduce, because on that amount we have not paid tax. We started paying tax on forfeiture from 14-15. So that we will not subtract. But what if I have forfeited in 12, 13, 10, 11, 8, 9, 7, 8, 6, 7, and I have forfeited, not the previous owner. Previous owner will not be adjusted. That is why amendment came. Then that I have to subtract even now. That is why the old law, bro. That is why the old law. Hello. Correct hai? So what is the summary of this forfeiture? See if this helps you. First, you have to see whether the forfeiture is done by the previous owner or the assessing. If previous owner forfeited, unfortunately, it was not getting taxed at all. There is absolutely no adjustment that you have to do in capital gain. See, previous owner forfeited earlier, still we were not subtracting. And previous owner forfeiting now. So previous owner has already paid tax in IFOS. So still we will not be subtracting. So forfeiture of previous owner under no circumstance will have any impact in capital gain. But forfeiture by assessee will certainly have an impact in capital gain based on when did the current assessee forfeit, sorry. Did he forfeit up to 13-14 or did he forfeit from 1-4-14, that is from 14-15. If he forfeited up to 13-14, then it was not taxable under IFOS. Therefore, you will reduce from your COA even now. And if the forfeiture took place from 14-15 onwards, this was taxable as IFOS, and therefore do not come on less from your cost of acquisition. Is the summary of the forfeited tokens. I once again say in IFOS, I will write one line, token forfeited from 14-15, taxable immediately under IFOS. That is over in one line. Clear hai? I want to seek one more clarity at 80% syllabus completion. Clear raise of hands and straight up, no bending of elbow. How many are foundation students? Foundation clear students. हाथ दुखता है क्या तेरा? नहीं? Fantastic. And of course, couple of minors, I am assuming the minors are obviously foundation students. Okay. You to have not studied all these subjects before, no? So it is difficult only for you. And the graduates, these are easy subjects, isn't it? Me just asking. BCom में you studied forfeiture of token. You studied capital gains. Studied as good as not studied. नहीं, एक मिनट, not studied. Kindly do not compare your BCom university exam with your CA intermediate exam. I gave CA inter, it was PCC. That was a November attempt. And 2 months after that was my BCom final year exam. मतलब third year BCom, TY BCom university exam. I did not touch any book. 3 accounts we had. Accounts 1, accounts 2, accounts 3. Actually, it was accounts, costing and FM. And costing was 50 costing and 50 audit. Is it still the same? And 100 marks ka tax. 4 papers, 3 accounts and 1 tax. Without touching any book. Direct exam hall. 94, 94, 94, 93 was the range of marks out of 100 in these 4 papers without touching the book, without opening the book single page before 1 day before exam also. Because that was after inter. Had it been the other way around, BCom and then inter, then it would have been 93, it would have been 39, 39, 39. In inter that also, and 39 and 40 is big difference. Huh? Bro, 29 and 39 is same, and 39 and 40 is different in CA. Only CA students can understand. Correct, na? I'll tweet this today. Only a CA student knows that the difference between 39 and 40 is bigger than the difference between 29 and 39. Let the others wonder what this is. Must. Fantastic. Ladies and gentlemen, please make sure you take these. I say this one more time, please. I know every time I say this, I feel that, yeah, if you are not ready to listen, then why should I? But I say this one more time. If you are not taking PGBP capital gains seriously, sincerely, you are inviting trouble, a trouble from which you will never be able to recover for the rest of your life. Because even if the new income tax bill comes, heads of income can't change. The heads have to remain the heads. They said we will remove the complications, the unnecessary exceptions, provisos, etc. But basic structure cannot change. Capital gain will be capital gain there also. So please make sure you take it seriously. Last, if cost of acquisition cannot be determined. We tried everything. We tried previous owner, we tried FMV, we tried all the possible options, but we cannot determine. Then we have to make a compromise. This compromise we did at the end of sale consideration as well. When nothing is working, we tried everything, but nothing is working, then we will make a compromise. The last best option is what we did in sale consideration. Sale consideration also, we had an example where we tried everything, but it was not working. Because if I give my ancestral property and against that I get Deepika Ji on a dinner date for a few hours, so the sale consideration that I am getting for my ancestral property cannot be valued in money, it is priceless. So what did we take? Fair market value of the asset transfer. My story was over. Then we talk about Deepika Ji's brother. Who? Brother? Pratik. He got my ancestral property. Some years later, he can sell it. Sale consideration will be actual. What is his cost? A question. Because he did not get it in inheritance. He did not get it as gift. He did give me some consideration. It was not gift. It was not inheritance. What was his investment in acquisition of this asset? Zero nahi. Convincing his Rakhi sister Deepika Ji, Rakhi sister Deepika Ji to come out on a dinner date with me. That is the question. No, cost of acquisition cannot be determined. उसका ही तो we want answer. What is cost of acquisition of भैया मोरे? more. What is cost of acquisition? Asset which we have received, मतलब be specific. FMV of asset received, that is the property on the day he received. Yes, because that was my selling price. What was my selling price? Fair market value of the asset transfer, the ancestral property. So whatever you have taken as my selling price, that much government has already received tax. So that much only will become his deduction. Just the difference being that fair market value for me was asset transferred, because for me it was date of transfer. For him it will be fair market value on the date of acquisition, because by the way, the amount is going to be same, just that for me it was date of transfer, but the same date for him is date of acquisition. My selling price will become cost price of Pratik Bhaiya. Or कीड़ा खाना in my class. You want to do more? No? Happy, content in life? Of course, when your sister is Deepika ji, you have to be happy. Correct? You don't blush in this, bro. This, ladies and gentlemen, is your cost of acquisition. Everyone is absolutely clear about this? Hello? Fantastic. Now what? Kawa? Kya? Now kawa? I kawa. Kawa only becomes I kawa. Indexation is already taught. Kawi. I understand. You are CA student now. And because in your case nothing is going to happen. Therefore, or maybe your preference is, sir, kawa and kawa. No. Normal places it is kawa and kawa. But it is legal, bro, and we are with you. Cost of improvement and index cost of improvement. I think I have had a little discussion on this with you. If I acquire a property, the acquisition cost is cost of acquisition. But if I add a floor, if I add a room, does that improve the selling price? With that, will I be able to sell the property at a higher price? But when I sell the property at higher price, the cost of acquisition will be my purchase price. Because the cost of adding the floor, the cost of adding the room is not a part of cost of acquisition. But that's not fair. Because there is basic principle of income tax. Expense incurred for earning income should be allowed as a deduction. And is my selling price improving because of that extra floor? So that extra cost that I have incurred to get increase in my selling price is going to be known as cost of improvement. Any amount that is incurred to get enhanced value of gross sale consideration will be considered as COWI. Amount incurred to get enhanced gross sale consideration will be cost of improvement. If adding the floor increases your selling price, you better do it. But then that cost of floor will also be allowed as a deduction. In fact, deduction will be given whether the addition was done for or addition was done by current owner or previous owner. See, is it possible previous owner acquired the asset and added the floor? Now again, in cost of acquisition, we will only take cost to the previous owner. So that floor that was added by previous owner is again not there in the cost of acquisition. So even if it was done by previous owner, we will take that also as my cost of improvement. So whether I add the floor or the previous owner adds the floor, I will be considering the deduction of cost of improvement of that extra floor, because acquisition will never include that floor ka cost. Correct? In fact, this is also eligible for indexation, but of course with respect to indexation, you are aware of a few things. One, in your exam till 22 July, it will work as it is. Two, in future years also. Now this is immovable property. So at least for tax calculation, this option continues to exist. And three, it is possible that this is a case of compulsory acquisition or conversion of capital asset into stock in trade. The transfer had taken place in an earlier year, but we are paying tax now. Why? Because of compulsory acquisition compensation received later or sale of stock later. So we know in those two cases, transfer takes place earlier, but tax is collected later. So that can also be a case where indexation will exist in your calculation even for future year students. Every batch after you people also, believe me, I am going to teach indexation the way it is. Just to tell them that now this indexation is only going to be for tax calculation and a couple of special calculations like conversion and compulsory acquisition. So yes, there will be indexation where your ICAI nahi, ICAI will be cost of improvement that you had incurred, the cost of that floor into CII of transfer year. That means end date of indexation will be the year of transfer. Start date of indexation, everyone notice please. CII of the year of improvement. This is something that you need to focus for two reasons. Reason number one, I purchased property in 0102 and I sell in 2425. So I kawa will be 0102 to 24. But that floor was added in 1112. So I kawi cannot be indexed from 0102. That I kawi will be done from 1112 to 24. The denominator will not be year of acquisition CII, it will be year of improvement. Now, I will get deduction of current owner improvement or previous owner improvement. So, do you realize here the word used is improvement? So, whether this year was CO improvement or PO improvement, the denominator will always be year of improvement. When we did indexation in cost, there was a controversy about start date of indexation. As per plain language of law, we will start from this year, assessing. But as per Bombay High Court, in the case of Manjula Jesha, we start that also from previous owner. Because in the denominator, the word used was controversial. The word used here in the denominator was assessee. Assessee over there. But here, this word is so clear. Whoever did it, we will not see the person. We will see the year of improvement. Which simply means, if you understand this line, I will go to my next point. There is no impact of the Bombay High Court judgment in the case of Manjula Jesha. There is no impact of the Bombay High Court judgment in the case of Manjula Jesha. Do you understand? Because there the word used was assessee. So start date was controversial. Here the word used is improvement. Whoever does it, we will see the year of improvement. Is that clear? And of course, the permutations of indexation, when available, when not available. Fantastic. Cost of improvement ka deduction will not be available for two assets. One, depreciable assets, we will not get the deduction. Come on, tell me the reason. Short term, I am not asking about indexation. I will not get deduction of cost of improvement. Why you are talking about indexation? I will. This is not this. Ek minute. COI not allowed. Indexation ka I am not asking. Cost of improvement is only not allowed. अभी बोलो भाई. Huh? Why cost of improvement is not allowed on depreciable assets? Rubbish. I have done improvement on that asset, so how value come होती है? तो rubbish. You have any better answer? Capitalize, that means do what? In block assets, how do you capitalize? If you have done any improvement, you will add in the block. If you add in the block, it is already a part of WDV. If it is part of WDV, means it is already part of CAUA, and therefore CAUI is not required. Is the reason. You understand? I can do improvement on my capital assets, but it is already a part of CAUA because it is going to be capitalized. Second, not allowed on self-generated assets also. Why? Why? Arey pagal, cost is only zero. There is no cost of improvement. You are daily working hard. It's continuous improvement. Ridiculously easy. Any COI that you have done before 1401 will be fully ignored. Any cost of improvement done before the base year 1401 fully ignored. Give me the logic of this and I will. Give me the logic of this. And I have something for you. So what? I had something for you. Because this was risky. Giving an offer. It is possible that someone will answer. So can't take a bigger risk. So I appreciate it. That is more important. If I acquire an asset before the base year, I get an option called actual cost or FMV, whichever is higher. And that FMV will include the improvement. Now think about it. I acquire property in 95-96. In 97-98, I add the floor. On 1401, when I compute the fair market value, that floor ka value will be a part of that. So because I am getting the fair market value option, it is going to be always ignored, fully ignored. The FMV will include the COI. Correct? Hai? Now you give this reason. Appreciate it. But I have to do some value addition. This is very important. Always ignore. So listen. Cost or FMV, cost or FMV, cost or FMV, whichever is high. I take FMV ka option. That will include improvement. Supposingly, I don't take FMV option. Do I have the option of taking cost? Still, I will not get COI. Means you take cost or you take FMV, that is your choice. Whatever you take, we are not going to give you because we are giving you FMV option. So whether you exercise that option or you don't exercise this option, improvement cost before base year will not be taken. Means you don't have the option of saying, sir, if I don't take FMV, then what will I take? Actual cost. Then can I take COI? No, still you can't take COI. So the option is only between cost and FMV. There is no option for COI before the base year. Clear hai? That, ladies and gentlemen, is your concept of cost of improvement. See, GSC is big, COI is big, and exemptions are big. NSC transfer expense or COI are not so big. Over. With this, we are in the chapter capital gains. As far as the theory of the chapter is concerned, left with only two concepts. One is the exemptions, and two, stock market. Computation will be GSC, transfer expense, NSC, but slightly different. Some special sections for stock market. Short-term capital gain 111A, long-term capital gain 112A. There are special sections. We'll talk about it. We will talk about it. But we have reached that stage of our life where we can solve any question of capital gain that does not contain exemptions. Any question. Okay. So, you know what? The second question that we will solve will have floor added. That means that is what? COI. So unless and until I do the concept till here, you and me are not in a position that we can actually solve a single question. But now we reach that stage of our life where we can solve good number of questions. In fact, every question of capital gain that does not contain stock market or exemption can be actually solved by us. We solve a few questions. Once we do that, we will actually start the exemptions, complete the exemptions, so that tomorrow we can finish the balance questions and stock market ka provision. Capital gain even in our book is starting on page number 120, and page 121 itself, it's not a question, but I still want to discuss with you. Page number 121, the table at the top. Discuss whether the following are capital assets. Because capital gain can arise only and only if the asset is a capital asset. Fantastic. Personal car. Discuss whether the following are capital assets. Personal car. No. Why? Personal and movable. Not a capital asset. Next. Household furniture. Is that a capital asset? Huh? Again, personal and movable. So that is also not a capital asset. Next. Business car. Still movable asset. Therefore, capital asset. Why? Because business asset will always be considered as capital asset. Next. Personal but immovable. So immovable will be considered as capital asset. Next. Jewelry is personal and movable. Capital asset. Next. Agriculture land in USA. Bro, don't ask answer. It is urban or rural. And this is USA, not Ulhasnagar. United States of America. Thank you. Capital asset. Next. Agricultural land in Kolkata. Wait. Now, agricultural land can be of two types, urban or rural. First, answer the law. Urban is capital asset and rural agricultural land, not a capital. Now, as far as Kolkata is concerned, see, whatever personal issues I have, based on that, it is rural area. But that is my personal opinion. And income tax law does not work on the basis of my personal opinion. So, in income tax law definition, it is urban area. And therefore, capital asset or not a capital asset? Okay, fantastic. And next, agriculture land in a remote rural village, not a capital asset. Fantastic. Types of capital asset, all the amendments etc. are also very clearly mentioned here. On question number 82 is on the next page. You have to decide whether the following assets are latka or satka. Okay? Fantastic. One by one. Please read the names of the assets. Mr. X transferred listed shares after 8 months. Now, if your question is, sir, this is sold before amendment or after? Because before amendment there are 3 options. After amendment there are 2 options. You take any of them and answer the question. Bro, before or after 8 months will always remain short term. Because for listed securities, before and after, both period is 12 months. Okay, next. Mr. M holds unlisted shares for first 8 months, second 28 months. Okay, answer them one by one. First 8 months. 8 months will always be short term because before or after, minimum 12. What about after? Do you need date of transfer? You need date of transfer. No, you don't need date of transfer. Because think about it. Unlisted shares. Acha, you tell me, before amendment, what was the applicable period? It fell in 24. And after amendment, if it is not listed, there is only one option. 24. So whether before or after, unlisted shares also is not changing. Think about it. Rather, unlisted bonds and debentures, there is a big amendment that they are now assumed to be short term, deemed to be short term. Correct? But listed, earlier also 12, now also 12. But for shares, nothing is changing. So what is your answer here? Long term. Okay, next. Listed debt-oriented mutual funds are transferred after 27 months by Mr. Y on 31st March 25. Fantastic. So happy now the date is given. So 31st March means you have to see after amendment. long term or short term? After amendment wala period you have to imagine. After amendment there are only two options, 12 and 24. This is 27 by the way, so that way it is easy. But supposingly it was 18, so what's your answer? excuse me हाँ तो listed will be long term. After 12 months all listed securities will become long term. Next,
listed equity oriented mutual funds are transferred after 27 months.
now come on, now that I have discussed, now don't disappoint. Okay, and then this, please also note, before or after, it was always in 12 months. 12 months may be at equity oriented mutual fund, and after amendment all listed securities. Next,
Building is held for 25 months.
once again from my side the only hint is that this also has not undergone any change. Before or after this time limit is same. So what's your answer? Long term. Next,
Listed equity oriented mutual funds are held for 19 months.
G. You want date? No. Why? Because 12 months was applicable before or after? Long term.
ZCDs are transferred, zero coupon bonds are transferred by Mr. W within 9 months.
Why short term? 9 months can never become long term. Next.
Listed debentures are held for 15 months.
Date of sale is not given. Still, why? Because earlier also listed, now also listed, 12 months applicable. So long term.
Mr. T transfers listed shares after 24 months.
So this is equal to, not greater than. Equal to will become long term. Equal to was in short term, no? So this is. Arre? Listed hai, so 24 is not applicable. 12 is applicable. 24 is greater than. See, 24 is equal to 24. Check calculator. So it is greater than 12, no? So therefore it is long term.
Jewelry is held for 14 months.
Here you will need date, no? Why no? Chalo, tell me. Before amendment, what was the applicable period? 36 months. Because it was not in the exception of 12 and 24. And after amendment? So 12 or, 24 or 36. 14 in any case is going to be. Even jewelry? Exception. Okay, next.
Listed debt oriented mutual fund held for 12 months and transferred on 31st March 25.
Short term. Why? Equal to. Correct hai? Equal to will go in short term.
Unlisted debentures are held for 24 months and transferred on 31st March 25.
Short term. Why? Because it is equal to. Therefore, it will be short term. Okay. Supposingly this was 36. Abdul. Deemed to be short term. Deemed to be short term. From 23rd July onwards, unlisted bonds and debentures are deemed to be short term. Is that clear, everyone? And one more thing I want to bring to your attention. Two places in the question we saw mutual fund other than equity. You observe them? Point number 3 and point number 11. Now, equity oriented mutual fund ka rule is separate. But we studied a section 50AA where we studied this. That there are certain assets which will always be considered as short term. Unlisted bonds and debentures after amendment. But before amendment, if this fund is a specified fund. Hello? You remember specified fund? Not exceeding 35% in equity. But provided that took place from 1st April 23 onwards, that acquisition date is not given. So in case it is specified fund, then this will also be deemed to be short term. Understood? This will also in that case be deemed to be short term. Clear hua everyone? More than 35% in equity, then it is not a specified fund. Correct? If it is not a specified fund, then you have to apply the normal rule. Listed will be 12 months and everything else will be 24 months. Followed? Fantastic. Next question. Question number. Acha, by the way, page number 123 now. Everyone is with me on this page? Please fold this page. Because I may not have printed cost inflation index on all the pages. Hey, ऐसा fold. पागल. A small fold at the top corner so that you can open this page whenever you. Stop selling your stuff to everyone. At least not before class. Because I don't print cost inflation index in all the questions, I'll explain the reason. Every year I have to change the dates of questions. Now every year I will have to change the CII because sale, so just imagine, last year in all the questions I had said sale date was this. So CII 348, 348, 348. All questions ka answer I have to change. Or alternatively, all questions ka that CII I have to change. I told you no CII will be given in the question. So 24, 25 ka again I will have to change, and every year I will have to change. So instead I keep it in the table. So whenever we want, we can do cross reference of the table. Okay. Keep this page handy that you can open this page whenever you need it. And question number 83. Please read.
Mr. X purchased a building on 1st August 23 for 10 lakhs and sold it for 15 lakhs on 1st Jan 25. He had also purchased jewelry on 1st July 2003 for 8 lakhs. Brokerage on purchase of building 10,000. Brokerage on sale of building 1%. The jewelry was sold on 2nd Feb 25 for 80 lakhs. Compute capital gains.
Now one thing please understand about indexation, that if the date of sale of your asset is 1st April to 22 July is the only time you will take indexation. If the date of sale, now two assets I have sold, first I have sold on 1st January and second I have sold on 2nd February, are both of them falling in the post amendment period, no indexation period. That means in my capital gain I won't be subtracting I will be subtracting only kawa. In case question says calculate tax, still my capital gain will be kawa only. I will have my NTTI. I have explained this to you. Then my NTTI will be split because special rate, normal rate. Special rate will have my capital gain figure. I will apply the new tax rate of long-term capital gain 12.5% and then give an option over there, or alternatively on this much amount we can also pay with indexation. At that place I will calculate the indexation. But my gain amount will remain same. Whether I choose 12.5 wala option or I choose that 20% wala option to pay tax, my capital gain in my NTTI will be sale minus cost. Are we clear? So any question which just says calculate income or calculate capital gain, then it will be only sale minus cost, provided 23rd July onwards. If it is up to 22 July, then the capital gain also will be sale minus index cost. Hello? But you all are the only people who have to learn this double check. Just imagine, next year ka kids, all questions sale minus cost, sale minus cost, sale minus cost, sale minus cost. Only at the time of tax calculation we have to give the option. Achha, by the way, we have sold jewelry and property. Both capital gains will be there. For jewelry, we won't do the option even in tax calculation. Because option of paying the tax as per old calculation is only resident, individual HUF, immovable property, purchase up to 22 July. Correct, eh? But here we have to calculate only capital gain. And in capital gain calculation, it will be only kawa because it is after amendment sale date. Everyone understands there are two assets in the question. First asset I had purchased. Bro, no capital gain. When I sell it, there will be capital. Understood? Second, I had purchased jewelry. No capital gain. Capital gain will come on the sale date. That means my question requires me to calculate capital gain, and that will come on two events, 1st January, 2nd February. Capital gain will come only on those two occasions. Hello? Correct, hai na? Purchase cannot trigger any capital gain for. And one thing I would like to again tell you, this question will not come in exam. I am not solving this question to prepare you for your exam. I am solving this question. Why, sir? So that you are ready with the format, pro forma manner of solving a question on capital gain. Every question has a format of solving. There is presentation. Now at this stage of syllabus, you will understand what I told you at the beginning of syllabus. Sir, how to present answer in tax? It is not balance sheet that in every chapter you have to make same. In scope of total income, we have to make ROR, RNOR. In exempt income, there is no format. This income is exempt, amount column 0. In house property, we have to do GAV, municipal tax, NAV, standard deduction, interest deduction. In salary, we have to do basic, DA, allowance, perquisite, gross salary deductions, net salary. In PGBP, we have to do net profit add less. In capital gains, we have to do GSC transfer expense. The format of your answer will be based on the chapter that you are learning. There is not a fixed, rigid format for every chapter. Is that very clear now? So this is done for formatting purposes. Question is asking us to do whatever question is asking should be your heading, computation of capital gain. And do you understand this capital gain will arise on two occasions? First July 25, that is sale of building. Whenever you solve, see, I am not solving this for the sections of the chapter. I am solving this to set your presentation chronology. What you should be thinking. I am now doing capital gain on building. Normally, capital gain is sale minus cost. But now we know it can be GSC NSC. Wait, in all questions, you won't be doing GSC NSC. Because what is the difference in GSC NSC? If there is no transfer expense, then GSC NSC same. You have to go and check if the question gives any transfer expense. If there is transfer expense, then we write GSC. If there is no transfer expense, we directly write NSC. Correct hai? Correct hai? So this is which asset? Building. Is there transfer expense on building? Yes, we have brokerage on purchase and brokerage on sale. On jewelry, there is no transfer expense. So when I do jewelry, I'll directly do NSC. But in building, I will have to do gross sale consideration. What is the gross sale consideration at which I have sold my building? 15 lakh rupees I have sold my building. Okay. Now what is my next step? We are not doing this for sections of the chapter. We are doing it for a mental step-by-step order. So your mind is thinking about copycats. Now first target has to be to develop that thought process in your mind. Then later on you sit and copy. What is your mind saying? Speak that and speak that loudly. Because only when your mind is willing to do the steps on a blank piece of paper, you are ready for the exam. So what is your mind saying? Because one by one, when you set this chronology in your mind, no, so you know what step you have to do one after the other. What is transfer expense? 10,000 is also there, no? So we will take 10,000, we will take 1%, we will take both of them. Which one we will take? 1% we will take, because this is brokerage on sale. And what about that 10,000? When I take my cost of acquisition of rupees 10 lakh, it will actually be 10 lakh 10,000, because what is cost of acquisition? All expenses before I acquired the asset. So brokerage on purchase will be added in the purchase price. Brokerage on sale will be reduced from GSC. Make sense? Chaliye, fantastic. So here we will be having only your 1%, 15,000, giving you net sale consideration of 14 lakh 85,000. And wait, please, mind ka thought process. After I put the minus sign here, I have to now take a call. Listen carefully. I will be writing here Kawa or I Kawa, any one of them. If you understand and observe all the concepts that I taught you in the chapter, in every concept I wrote like this, because it can be any one of them. Concept mein it can be any one of them. Question, it can't be both. Question has to be rigidly any one of them, Kawa or I Kawa. First of all, when does I Kawa come? Only when the asset is long term. If the asset is short term, there is no question of I Kawa. Correct? Correct hai? So you have to decide that you will be writing only one of them. I will tell you three things, three steps. See, listen, your mind is very powerful. Only when you set your mind with respect to these three steps, now you will get your answer. First, is it long term or short term? If the answer is short term, my answer is over here itself. Because ICAI ka question arises only if long term. So first I have to check long term or short term. Wait. Second, even if it is long term, certain cases were disqualified for indexation from first day itself. bonds and debentures, slum sale, stock market, NRI special rates you can leave. Non-resident having securities, depreciable assets, certain cases day one disqualified. So again my answer will be cover. So my assets should not be falling in that list. And third and last, and this is triggered and activated from this year onwards, even if it is long term, even if it is not falling in the disqualified list, if the date of transfer is 23rd July onwards, then still my answer will be this. So finally, when will this come? Listen, long term, not falling in exceptions like bonds and debentures, depreciable assets, and transfer up to 22 July is where you will write ICAI 3 steps. Till last year, students had to check 2 things: long term, not in exception; long term, not in exception. Now, long term, not in exception, and up to 22 July. And this third thing, only you have to do. Next year, students won't do only ICAI. They will do ICAI only at the time of tax calculation. Hello, but you have to. What, sir? Think all of them. Think about them. Think about them, and take a final decision. 3 steps you should be doing. One more time, I would like to repeat. This question is done only for that. This question is not done for actually practicing capital gains. Step number 1, long term. Step number 2, not in exception. Step number 3, up to 22 July. Give me your final answer. Kawa or I Kawa, I will write only one of them here. Give me your answer. Kawa and the reason. Transfer afterwards. That's your reason. Okay. Any other reason? देखो, cost of acquisition, everyone is giving the answer. What is the answer? Cost ka 10 lakh? No, sir. 10 lakh plus the brokerage, 10,000. So effectively we have 10 lakh and 10,000, giving us our answer as 4 lakh 75. Ruko. There are some students who just saw this date and said, sir, kawa. Sir, why I should think about the other 2 things? Even if it is long term, to hell with it. Ultimately, after 23rd July, it will always be kawa. So they took a fast route, date and direct kawa. If you take that fast route, this will probably still be a correct answer. But you will still go wrong here, ladies and gentlemen. This is short term because this is a short term capital asset, and thus I told you first step long term, short term. First step is not date. Nah. First step is long term, short term. Because if it is short term, then the rate of tax is different. We are not doing long term, short term only for indexation. We are doing latka satka for deciding here I will write latsak or satsak. Because the nature of gain decides my tax rate. Later in set of chapter, we will learn one more concept, that long term gain can be used for different laws and short term gain can be used for different laws. Adjustments. So we need to identify this always, and thus your first step should not be 23rd July. Your first step will always be long term. Then it is long term and building is eligible also. But because it is after 23rd July, cost of acquisition is what you could have done. But here the first answer itself was short term, and therefore this is short term capital gain. Is that clear? This is how you will solve. Now think about what is capital gains. Think about the amount column. Amount column, you have done only 1, 2 and 3 amounts. The remaining are the resulting figures. Capital gain ka chapter ka real beauty is its particulars column. All the thinking will happen here. The amount that we have to finally write now will be 2, 3, 4, 5 amounts. If there is more cost of improvement, say 2, 3 floors were added on different dates, we can have more cost of improvement. But there won't be. You observe the format: GSC, transfer expense, NSC, Kawwa. The real knowledge is your particulars column which you don't have to memorize. Think about it. What have you memorized? Nothing. And honestly speaking, in this particular year, no, there is still slight confusion because 36, 12, 24 or 12, 24. Indexation, no indexation. 20% with 10% option or direct 12.5 without indexation. Because of date issue, two types of calculations exist. Next year onwards, to that confusion will also be eliminated. So let's give exam. This year. हाँ नहीं but September का syllabus is also same only, just to let you know. You'll get more time to do self study, so you'll be writing more mock tests, so you'll be better prepared for the exam. Sir, preparation नहीं हुआ, therefore you don't give mock test, no. So September will give you better opportunity. Better idea do. Jan में you'll get further 4 months. वो best है. Or let's do this. May 26 you will clear 1 year extra. Right? New budget will apply, bro. Get one thing in your brain very clear. There is a budget announced this year. Everyone is talking about it. Everyone is blowing the trumpet of 12 lakh, 12 lakh, 12 lakh. Not applicable for my exam, sir. New budget is not applicable before May 26 exam. May 25, September 25, January 26, this will apply. If you have students who just gave foundation and are joining our CA Inter pre-result batches from tomorrow only we are starting. I will teach them the same syllabus that I am teaching you. Jan 26 is their exam now. Same syllabus is applicable. So if you want anyone to buy video lectures, you can sell these video lectures only. Same syllabus, same books. Now new books will start once the budget is finalized. Only CA students know that whatever was spoken is not final law. It will undergo amendments. But now the probability is less because one, government has majority in both houses, and two, there is no anti-assessee provision which will put pressure on the government. Sometimes if there is any anti-assessee provision like removal of indexation, so there was pressure and that backdoor entry of two options came when it became the act. But most likely that finance bill as it is will become finance act. To hell with it, you don't have to study. You have to study budget of 2024, 23rd July 2024 election year. ये clear है? तो September and January are still options, same assessment. नहीं, bro, the right time is now. ठीक है? तो for this short term, long term का segregation is extremely important to check whether you all have developed the thought process. This is your blank paper. This is your answer paper. And this question is not over. So now you will do the second part, rather the easier part, complicated part, because there was brokerage in both sale and purchase. I have completed. You have the format also now with you. Your blank paper, whatever you say, I will write. Because first question is only for formatting purposes. बोल क्या करूं? बकवास नहीं करो. This is your blank paper. What will you do? Sale consideration. Of what? Yourself. Sale consideration of what? See, that is what I am making you understand. That when you don't do writing practice, no, you don't realize that blank paper by what you have to write to get marks. Blank paper, you don't start sale consideration. Sale consideration of what? What are you selling? And don't try to sell yourself, bro, because capital loss. What will you write? No, sale consideration is wrong. You have anything better? Sale of. I still give that to you despite that also being wrong. This is going to have an impact, especially in your year. Why don't you understand? This jewelry is for long term, no. The year in which you are giving exam, this has got direct impact on your answer. The date of the transaction is extremely important up to 22 July or from 23rd July. You can't be doing that. Now you could have said sale of jewelry. Third attempt. First attempt you said sale consideration. Second attempt you said jewelry. Third attempt. Now what? Good. Why direct NSC, sir? Because there is no transfer expense. So direct net sale consideration of 80 lakh. Now what? 80 है ना? क्या 8 lakh कौन है? Who's the पागल? Cost को you make sale. Fantastic. Capital gain 0. No tax. Good CA. Now what? Minus sign. And wait. This is where I always take a pause. I'm still holding my breath. Tom Tom. Exceptions. Not falling in the exception. So eligible for indexation. Third. After amendment. Therefore. Cow. Sir, directly I could have seen this date and said cow. But then this will be what? That you can't decide, no? With the date. For that you have to decide. What? Long term or short. Here it is cow. And without any brokerage. Do you realize what? Cost of acquisition 80 lakhs. This 72 lakh will become your Lattersager. You understand? Question 1 will never, question 83 will never come in exam. Still I took more time on this because practice like this decides what you are doing on blank paper. Every day going through the PDF and the hard copy books is of no bloody use as long as multiple times I have told you this, as long as you do not pick a blank paper and write on that blank paper, you are not exam ready. You are not exam ready. How many of you all follow cricket? Cricket? Bilkul nahi. Okay, I'll explain. In cricket, when a sportsman is injured, for example, Indian cricketer Rishabh Pant, he met with an accident. He got injured. He underwent surgery. Forget about playing for the country. He was not moving also properly for a very long period. He recovered from that injury. Recovered. Injury is over after a time. But he is not ready for the match. Now he has to go and again practice on field, wicket keeping, batting. He is a wicket keeper. That recovery phase was what you do by referring the book again and again, PDF and book. That makes you feel, now I can go and play the match. No, you can't go and play the match. Because just because your body is fit does not mean that your wicket keeping skills now are intact. You have to go and check that also. And that will happen only on a blank piece of paper. Understood? Fantastic. Next. Question number 84.
Mr. X bought a building for 7 lakhs. 7. He built a floor for 3 lakhs on 8 August 12. It was sold on 1st March 25 for 85 lakhs. Brokerage chargeable 1% each on buy and sale from the capital gains.
Now then again the question is, listen, this is the correct and proper format. Now I am not writing computation of capital gain. Now that you have the format, first thing you will write is the date. First of all, here there is only one asset. So you directly write what? GSC or NSC? Why GSC? Because this time there is transfer expense. What is your gross sale consideration? 85 lakh. Correct hai? Next. Transfer expense. Rupees 85,000. Giving you net sale consideration of 84 lakh minus long term. Long term, not in exception. After amendment. Don't complete that breathe before you do these 3 steps. नहीं complete. क्या हो? Not because of me, no? हाँ तो जो करना cost of hello, everyone is with me. Cost of acquisition. What was the purchase price? 7 lakh. So shall I subtract 7 lakh? No, sir. 7 lakh plus 1%. Cost of acquisition 7 lakh 7,000, giving you your lut sug of. Acha, addition 4 is also added. Good, I was checking if you're paying attention. Minus. He has added a floor. You understood why we had to wait till COI to start question solving? Added a floor of rupees 3 lakh on 1st August 2012. What is called that? What is that called? What is that called? Cost of improvement. Correct hai? Is that also eligible for indexation? Eligible cost of improvement. So will we index it here? No, here we won't. We took a joint decision for both. If this is Kawa, this will be Kawi. If this is I Kawa, then this will be I Kawi. Correct? So now we have to only subtract. Then your presentation should be 7 lakh 7,000 and 3 lakh, giving you total of 10 lakh 7,000 and your long-term capital gain of 74 lakh 8,000. Understood? Third. This is immovable property acquired before 23rd July. So here I have one more option, no? Capital gain will remain this. If I was doing tax calculation, so I will do 74 lakh 8,000 into 12.5%. Wait. Or 8415 minus both of them indexed, whatever answer I am getting, 20%, and choose between them whichever is beneficial. Lower. Understood? But that is going to be done only and only at the time of. Had it not been industry pressure and auntie would have been very, very stubborn like she usually is, that no indexation means no indexation, then life would have been really smooth and easy for us. Not for you people, but at least for next year students. Bro, and if the new income tax law comes in very, 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 very simple language also, May 26, November 26, or for inter we have September and January, September 26, Jan 27, will have no value addition because they have to study this budget. 25. New income tax law. I hope auntie is not planning this dramatic thing of, as we see some useless influencers putting useless things on social media, unverified data, that this new budget that is announced now will be for a part-time financial year, April to December. New income tax bill will apply from 1st January, change previous year ka definition from January to December, so that every time you don't have to write 1920 or 2021, you just have to write calendar year equal to financial year. So how will institute conduct exam now remains a question. What will they do with this part financial year of 9 months? How they will do? And companies across the country are adjusted to that Q1, Q2, Q3, quarterly results have to be published by listed companies in the newspapers. Everywhere we follow financial year system. All our apps, etc. are made according to financial year. Some influencers are spreading false rumors. Do not believe in them unless and until auntie does it. Now, if auntie does this in the middle of the year and says that students have to study this income tax law if the income is up to September, and this income tax law if the income is up to October, I will take a break from teaching for 1 year. ये पक्का है. You can't expect me to teach old income tax law and new income tax law. Choose whichever is beneficial. Old regime, new regime itself is a big headache. तुमको समझता है? Don't ignore me like Modi ignores Kejriwal. She's like, he's speaking, I am solving the next question. You have any shame sitting on the first bench here? Like, whatever I am saying, she's ignoring. He's actually solving the next question. I understand your proactiveness, but not when I am speaking. Do this in the break, no? Nahi, tabhi to we want to watch reels. In gain calculation, it is going to be this answer. Now do. You will read. Question number 85.
Mr. X bought a building for rupees 10 lakh in 2002. In 2006-7, he enters into a contract with Mr. Y for its sale and 1 lakh is forfeited on cancellation of contract. On 1st January 2025, he enters into a contract for its sale with Mr. Z and rupees 2 lakh is forfeited. Finally, it is sold to Mr. A for rupees 85 lakhs on 1st February 2025. Compute capital gains.
What is that extra concept that has come in this question now? So last time Kavi came, now forfeiture is coming. Understand the chronology. First purchase took place, then forfeiture took place, then one more forfeiture took place, and then finally sale took place. Ultimately, capital gain will come when this sale is taking place. Huh? So capital gain is not going to come before 1st February. You understand that? Huh. Now what? What do you want me to do? This is your blank. Now do no. This is your blank paper. Now do no. Gross sale consideration. Why? Forfeiture is brokerage. I learnt a new concept today. The token that you forfeit is brokerage paid. Wow. Your income is your expense. Wow. Nonsense. That's why I say, be with me. Don't go ahead and don't stay behind. Net sale consideration. Because there is no brokerage, no transfer expense. NSC, how much? 85 lakh. Minus. Tom. Not in not in exception. And after, therefore, cover. What was my cover? 10 lakh. Correct? So will I subtract 10 lakh? No, bro. I have done some forfeiture. The forfeiture that I have done will be subtracted. First forfeiture was done from whom? Mr. Y. How much is that forfeiture ka amount? 1 lakh. So we will subtract rupees 9, 1 lakh. Second forfeiture was done from Mr. Z. Mr. Z, we forfeited rupees. No, we forfeited rupees 2 lakh. What do you mean by no? Now when I say how much you subtract, then you say no. See, if my question is have you forfeited, then you can't say no, you have forfeited. Have you forfeited? So will you subtract? No. No. Why? Because this is 14, 15 or later. So it is taxed as IFOS. So why did you subtract that 1 lakh? 11 years ago law change. But before 14, 15, you've not paid tax under IFOS. Finally, your kawwa will be. Hello. And is there any kawwi given? No. So they are adding one concept. They are, matlab, I am only in questions adding one concept. Later you will have a, matlab, later you will have a question where improvement and forfeiture will come together. Then there will be immovable property, the stamp duty value will also come. Then inheritance will come. Then before base year will come. There will be a time when everything will come together, bro. Which joke you laughed at? But when I say there will be a time when everything will come together, it is not even a joke. What made you laugh? Was that a joke? No. क्या है? We are adding one concept at a time in our questions. When you do one at a time, no, you get comfort. Okay, sir, improvement done. Okay, sir, forfeiture done. One more concept will be added. So slowly, one sip at a time. One sip. Peanuts. One sip. More peanuts. If you do everything together, no, so you vomit. So slowly. धीरे. Okay. धीरे. क्या सुनता वो? धीरे. Forget it. Question 86.
Mr. X purchased a building on 21st March 2003 at a cost of 21 lakhs. On 1st May 2007, he entered into a contract with Mr. Y for sale of building. Y gave an advance of 1 lakh, but the same was forfeited and the contract cancelled. On 1st August 2008, he incurred 5 lakhs to add one more floor to the building. He sold the building on 1st July 24 for 98 lakhs and paid brokerage 1 lakh.
तभी someone like sir, okay, this is data. What do I do? Arey bro, compute capital gains. No, some are saying Mr. X purchased building. See, first transaction purchase. Then what? Forfeiture. Then improvement. Matlab, can I say this question has brought forfeiture and improvement together? Haan. Eh, this is sale consideration. This is brokerage. Huh? Forfeiture is not brokerage. This is brokerage. And when this sentence got over, everyone is like, okay, Mr. X. Story hai na? It's a story. Arey, compute capital gain. Compute capital gain. Start with, 1 minute. Start with, why gross sale consideration? There is brokerage. GSC is 98. Next step, transfer expense given to you in the form of brokerage of rupees 1 lakh. Next step, NSC 97 lakh. Next step, minus. I will not hold my breath. You purposely do it. Some are purposely not giving answer for a very long period. We see what happens to you. Well, I don't look my age, but then I am on the other side of 30s. Please, I am not holding my breath. You give the answer. But long term, not in exception. So eligible. Sale before the amendment. Oh boy, this means this is going to be ICAI. And listen, even in cases of ICAI, you have to first bring kawa. It is that kawa only which will get indexed. You understand or no? So first identify your kawa. What was your kawa? 21 lakh? While my kawa was 21 lakh, please understand, I can't index this because a portion of this cost was recovered by me in the form of forfeiture. Forfeiture done up to 13-14 of 1 lakh will be subtracted. And once I get this, it is this 20 lakh that I am going to index. Correct or no? So 20 lakh. Now listen carefully. Whenever you get a question like this will remain intact. You have to, that page that you have, I told you to, that corner of the page that I told you to fold. And how could you? So from that page, I divide by, I want to know from you which year ka index you are taking. 2-3 ke 3-4? 2-3 or 3-4? Are you sure? Why? Because January, February, March are very, very tricky. Huh? April to December, people don't make mistake. But Jan, Feb, March, remember, it is the other part of the year. That means, yes, it is 2-3. 105. Correct or no? What do you get as your ICAI? 69 lakhs, 14,286. Wait, it is not yet over. Now, if this is ICAI, then this has to be ICAI. If indexation will come, it will come for both. What was the improvement cost that I have incurred? 5 lakh rupees. And is that also going to be eligible for indexation? So multiply by 363, divide by 105 again. No. Divide by cost inflation index of 89. That is 137, giving you ICAI 13 lakh 20 13,24,818 will give you your 1 minute. The amount that will come here now is your romance with your calculator for the rest of your life. That's not my job. You know what is my job? To make you understand this will be indexation because it is pre-amendment period. To make you understand, but this denominator will be different. To make you understand that forfeiture will be subtracted before you do your indexation. To make you understand that transfer expense means brokerage. Forfeiture is not transfer expense. That is not my job to explain, but I have to explain that brokerage is what you pay. Forfeiture is what you receive. Forfeiture cannot be transfer expense. Wherever there will be transfer expense, I will be taking GSC. If this 1 lakh was not there, I would have started with NSC. Calculator will do its job. Is that clear? Chalo, fantastic. You must be so certainly aware that CA exams calculators are not allowed. They are compulsory. You all were not aware of this. I thought you all must have been educated about this on the first lecture itself. Very first lecture. First lecture of accounts, you were not told. CA exams calculators are not allowed. They are compulsory. Acha, so in the last 18-20 years, there are maybe amendments in the examples given in your accounts case. When I was a student, I was told this, that in CA exam calculators are not allowed. They are compulsory. Your mobile phone should not be on silent mode. They will be, or they have to be switched off. Same thing. You all have heard that? क्या implied? ठीक है. At that age, I was caught once in front of my friends. I was doing acting, imitating, and someone was standing behind me and observing. And I was thrown out of class for doing acting, for imitating. You also do my acting. No, I have got no problem. No problem. You also do my acting. No? Ladies and gentlemen, the bringing the answer wala part, please don't expect to waste classroom time in that. Okay, because if I start doing that, some people will say, hey, next question. Question 87.
Tax purchased a building on 21st March 1996 for 8 lakhs. The following additions were made to the floor: 99, 2000, 10 lakhs, 1 lakh.
Ganja, ganja. 1 lakh.
97, 2 lakhs, 11, 12, 3 lakhs. Fair market value on 1st April 2001, 10 lakhs. The stamp duty value as on 1st March 2001.
April 2001.
9 lakhs. The building was sold by him for 1 crore 80 lakhs on 1st February 25. He paid brokerage 1 lakh on sale of the building.
Thank God 1 crore 80 lakh. You didn't say 18 lakhs. Thank God. Ladies and gentlemen, you understand. Capital gain will come only at this occasion. All other things are costs that he has incurred. I want to know from you. No, we won't go to be. We won't. We won't be going to direct solving of the question. I want to first know from you which new concept has come. Stamp duty value before base year. Okay. Before base year ka concept is. Anything else? So we have multiple improvement costs. Before base year ka we have been given. This is the extra part. But forfeiture is not there. We can always have a question, same question having also with it forfeiture. So for now, we will go and solve simple capital gain. First step, date. चलो ठीक है. First step. कौन बोला? Who was that? कभी जाना है बोलो. Who was that? She. You said it. बोल date. Date is 1st February 25. Correct है. Date is important. Because this decide, capital gain में date is important. In your exam, this will decide the treatment that you have to give. Now what? Gross sale consideration. Some of the questions where I have not written the date of transfer, it is implied that you are keeping a track of that date in all the questions, because while subtracting kawa, that is of immense importance. GSC 1 crore minus, so transfer expense 1 lakh, giving you net sale consideration 1 crore 79 lakh. Hello, minus long term, not in exception, so eligible, but after amendment, so cow. Now, what was the cost of my asset? 8 lakh rupees. Will I take that 8 lakh? No. Whenever an asset is acquired before base year, now this is the time to apply your concepts. You don't have to memorize the full special case list. You have to apply that concept. So, I will take my actual cost of 8 lakh, but under section 55(2), I also have the option of taking fair market value on 1401. What is that fair market value on 1401? But in that fair market value, we were taught one concept that sometimes valuers are satisfied that the value is higher. And therefore, if stamp duty value is available, it should be restricted to, correct? Hai? So listen, between these two, we choose whichever is lower, but our final answer is going to be whichever is higher. Final answer, 9 lakh. Understood? So what will we take here? We would have indexed this 9 lakh if it was before amendment. Now, Kawi will also be Kawi, not I Kawi. First, Kawi, 99, 2000. We have incurred cost of rupees 1 lakh and we'll get deduction of nil. Why? Nil. 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 Why? Before the base year, any improvement cost will be fully ignored. Second, in 2009-10, I have incurred cost of 2 lakh. Will I get the deduction this time? Yes. And then finally, 2011-12, I have incurred cost of, I'll get deduction of this 3 lakh, giving me total deduction of 5 lakh, and accordingly, I will get my Lutzag of whatever you get, bro. Romance your calculator for the rest of your life. That's the only date you will get in your life. ये 87 था. So now we go to 88. My bad. 88, please.
Mr. X acquired August 1999 for 7 lakhs. Fair market value on 1st April 2001, 10 lakhs. One floor is constructed on 1st May 2000 for 1,50,000. One more floor is constructed on 10th August 2002 for 2 lakhs. He finally sells the property on 10th August 24 for 95 lakhs.
120 seconds given to you to solve this question on the notebook. Notebook, blank paper right now. 120 seconds have already started. हाँ ओ हो गया, टाइम अप। बोलो जीएससी एनएससी डायरेक्ट एनएससी बाय नो ब्रोकर, फटाफट अमाउंट 95 माइनस cost of improvement acquisition. It is long term, but the sale is after amendment. So what is going to be my cost of acquisition? Actual cost of 7 or fair market value, and stamp duty value is not given, so I'll directly take this 10 lakh. There is no forfeiture, but I think there is COI. So I will take deduction of my COI. First I incurred 1st May 2000 nil because before base year, and second 10th August 2002, which without indexation I will get deduction of 2 lakh, giving me total deduction of 12 lakh, deduction of 12 lakh, and of course 83 lakh will be your answer. Question number 89.
X purchases a property on April 1st, 1996 for 95,000. Later on, he gives the property to his relative Y on May 15, 2005. The following expenses are incurred by X and Y for removal of the property. Addition of 2 rooms by X during 98, 99, 25,000. Addition of first floor by X during 3, 4, 40,000. Addition of second floor by Y during 10, 11, 1,15,000. Fair market value of the property on April 1st, 2001 is 1,15,000. Y finds a buyer in C to whom property is transferred for 68 lakhs on December 1st, 24. Compute the capital gain chargeable to tax in the hands of Y.
First of all, why are they asking us to compute capital gain for Y? Because why not X? Because X was the original owner. But X has gifted. See, X has gifted, so not a T. Capital gain will arise only and only when Y is selling it to C, and therefore the question is asking capital gain for Y. Gross sale consideration ke direct net sale consideration? Net sale consideration 68 lakh rupees. Minus sign and think, and this time improve your speed. Three things you are thinking in your mind. Improve your speed and give me the answer. Long term. No, not in exception. And after amendment. After amendment so kawa. Now what was your kawa? 95,000. क्या नो? एक मिनट. You tell me. Before base year. So what? Fair market value or stamp duty value, that is not given. So fair market value. If stamp duty value was given, we would have taken. Fair market value, direct answer. You have to compare with something. No? अरे तो compare with what? So with what you are comparing and saying whichever is higher. So that's what I am asking. No, first what is the cost? Then you take FMV. No. 95. Now this is not his cost. Then why you are taking 95? Because this question has added the concept of previous owner. Please understand, we will be taking cost to the previous owner under section 49(1), that is rupees 95,000. You are directly saying FMV on 1401 under section 55(2). I appreciate you are saying compare, which are compare with what? First you have to take cost, then take FMV. Correct. Now here I have been given 115. Supposingly the question had given me as stamp duty value as 1 lakh. So I would have restricted 115 to 1 lakh and compare. Okay, supposingly the question had given stamp duty value of 90,000. Then this would have been restricted, but in comparison 95 will be my answer. But here they have not given only. So between these two, I will choose this. Any forfeiture given? Not given. That means 1,15,000 will become my correct hai. And what about the Kawi? First Kawi 98, 99. Y nil before base. Second Kawi 2003, 4 40,000. And third Kawi 2010, 11 of 1,15,000, giving you total Kawi 1 lakh 50. This becomes your Lutsuk. Understood? Hello? Fantastic. Question number 90. Question 90.
X buys the property on April 1, 1996 for rupees 95,000. He enters into an agreement for sale of the property to A on November 1, 2003 and receives rupees 10,000 as advance. A could not, however, keep his promise and advance of rupees of 10,000 given by him is forfeited by X. Later on, X gives the property to his relative Y on May 15, 2005. The following expenses are incurred by X and Y for renewal of the property. Addition of 2 rooms by X during 1998-1999, 25,000. Addition of first floor by X during 2003, 40,000. Addition of second floor by Y during 10-11, 1,15,000. Fair market value of the property on April 1, 2001 is 1,15,000. Y enters into an agreement to sell the property for 8,50,000 to B on April 1, 2014. After receiving an advance of 50,000 as per agreement with B, but the money is forfeited, Y ultimately finds a buyer in C to whom property is transferred for rupees 85 lakh on December 1, 2024. Compute the capital gains chargeable to tax in the hands of Y.
Majorly the question is same as the previous question. X has purchased and then Y inherited and sold it. In fact, the purchase price, the fair market value, the improvement cost, years, everything is same. What is the only addition compared to question number 89? That both the previous owner and current owner have done some forfeitures. So we will be careful with respect to that. But once again, capital gain will come on Y only. Directly, net sale consideration 85 lakh minus Kawa or I Kawa. Kawa. Why? Long term eligible but after amendment. Kawa. So how will we take Kawa? Cost to the previous owner? Hello. What was cost to the previous owner? 95,000. Compared with fair market value on 1401. What was that? 1,15,000. Between them we will choose 1,15,000. But then this 1,15,000 won't be our answer here. Even if it was indexation, no. We would have first subtracted the. This is the only difference no, between previous question and this question. There are two forfeitures given. First, from A by X. How much was the amount forfeited? 10,000. And therefore, we will have to reduce from our cost rupees. Rubbish! Forfeiture by previous owner can't be adjusted. That is why the law got amended. And don't say, sir, yesterday's PD, this I taught you today. Previous owner ka forfeiture will not be subtracted. Correct hai? Second, from, who was the second guy? B. This time it is forfeited by the current owner Y. And therefore, we will subtract rupees. No. Because this has been taxed under 1415 onwards. So effectively my Kawa remains 1,15,000. You understand? And as far as Kawi is concerned, it is same as your last question. All the amounts are same. Years are also same. As we already discussed, the only addition between previous question and this question was this forfeiture part. The only addition was this forfeiture. Other than the forfeiture, everything is same as the previous question. Correct hai bro? Everyone? Fantastic. Okay. We are done till question number 90. Now, the thing is that we have realized one thing, that other than exemption, we can solve all the questions. But the problem is that exemptions as a concept require about 1.5 to 2 hours. What is the time of your next lecture? 5 o'clock का time है ना. ठीक है. So we'll solve 2-3 more questions. Then we'll take break. After break, we'll start exemptions. We want to plan in such a way that at least exemptions are over today so that you can revise tomorrow's class. We start with stock market, first couple of hours stock market, remaining couple of hours we finish all the balance questions and move ahead in life. Okay, so question number 90.
X purchased a piece of land for 1 lakh on 1st April 96. Fair market value on 1st April 2001, 2 lakhs. In 5-6, he constructed a building on it for 4 lakhs. The property was sold in 31st July 24 for 25 lakhs. Though the value adopted by Stamp Valuation Authority was 95 lakhs, the fair market value of the property as ascertained on request of assessee was 94 lakhs. Compute capital gains.
Now listen, which new concept has come? Stamp request. Stamp duty value. Whenever there is sale of immovable property, we will not directly take actual selling price, actual or SDV, whichever is higher. I have sold my property on 31st July for 25 lakh, but the value adopted by Stamp Valuation Authority was 95 lakh. So question number 91. First step is going to be, there is no brokerage, net sale consideration. What is actual? 25 lakh. Correct hai? That will be compared with stamp duty value. What was stamp duty value? In a normal circumstance, we compare whichever is higher, so our answer is 95. Wait. Whenever we were choosing whichever is higher under stamp duty value section 50C, there were some relaxations granted to the assessor. One, remember we were going to appoint one valuation officer by requesting and he will compute a value between the two of us, and we have done that. The value adopted by the valuation officer on request of the assessee is 94 lakh, and whenever he computes between the two of them, we have to consider that see valuer will not go below 25 or above 95. So can I say we have to take the value adopted by Stamp Valuation Authority? There is no agreement date given to us. If there was agreement date given, then we would have taken that also. It is not given. So finally our comparison is not going to be these two. Finally our comparison is going to be actual or 94. While this is the stamp duty value, but the valuation officer has reduced. So between these two we will choose whichever is higher. Finally our answer to net sale consideration will be no, sir. No. Even if your answer 94 lakh happens to be correct, no, I still won't give you marks because you have made one mistake. $94 lakh. Even don't do. A 10% margin on actual is allowed. Actual is how much? If this value was 26 lakh, then 25 will be my answer. 27 lakh, then 25 lakh will be my answer. 27 lakh 50,000, then 25 will be my answer. But if this answer is 28 lakh, then this will become my answer. Because 10% on actual ka range is allowed, the last point of 50C. Arey bro, understood kya nahi? Understood, no? So 94 lakh rupees. Everyone clear about this? Now what? Long term, not in exception, after amendment. Correct. So what will we do? COA. What's your answer? Actual cost 1 lakh or fair market value on the base year 2 lakh. What will you choose between 1 lakh and 2 lakh? SDV is not given, so we have only two options, so 1 lakh or 2 lakh. 2 lakh. Everyone. And what about that building ka 4 lakh? क्या land है तो what? Cost of what? Ask the question. Land है तो अरे what land है तो cost of what? Say the full sentence, no, then I will answer. Land का there is no cost of acquisition. Please ask your question to me or ask yourself. What are you doing? तो हाँ तो go ahead. No, you are giving me data. Ask your question. So you don't have cost of land. When you are selling only the building. Building is in the air. Along with the building, the land will also go. So when you are giving your building with the land, so your total cost will be cost of land and cost of building or no? Okay, you are giving only building, and he's taking the building and going somewhere with the building. Is your land going with the building? So is the property that is being sold for rupees 94 lakh, including your land as well? The land ka cost will be taken or will not be taken? Ask your question. Photo cost of. What will I understand with that? Why can't you speak full sentences? Whom are you scared of? Am I sitting with some weapon here? Am I going to hit you? Nahin, na. Why do you lack that confidence in asking your doubts? If you lack confidence in asking your doubts, what will you do in your exam? Ask your doubt with confidence. Let it be illogical. Even if I make fun of it, I won't. Believe me, I won't. But in an absolute stupid case where you say, sir, brokerage equal to forfeiture, I might make fun for you for a moment, लेकिन next moment you and me forget it. Sir, वो तो Sir, वो तो cost of, what cost of? If I speak like this, वो तो cost of. So what will you give me? Cost of? Cost of what? Speak the full sentence. Are you giving your land along with the building? The land cost will come. Where is the confusion? When you asked your full question in a proper sentence which I could understand, I gave you the answer which you understood. If your question only I will not understand, think about it. They asking a question in exam which you don't understand. How will you answer it? Will we take cost of land? Yes. What is the actual cost of land? 1 lakh or fair market value of 2 lakh. Between them, whichever is higher. So 2 lakh. Now I want to know from you, what are you thinking? What is your next step? Cost of improvement? No. This is that one mistake that you are likely to make here. And cost of acquisition, because construction cost is also cost of acquisition. What is the difference between the previous questions and this? There I had building, I was adding floor. Adding floor on the same asset is improvement. Here the land is a separate asset, building is a separate asset. Cost of land is cost of land and cost of building is not improvement of land. Cost of building is addition of the asset, because where I am selling here, this is land and building. So I have to take this cost and this cost. This building is not improvement, this is an addition, a different asset, and both assets ka selling price are covered here. Of course, in exam, if you show building ka cost, how much is that? 4 lakh rupees. No? As cost of improvement, you will still subtract 4 lakh only. If you talk about the final answer, what are you getting? 88 lakh. You will still get the same answer. But if you classify this under cost of improvement, you are still considered wrong. Sir, why? Because that is cost of acquisition of building. That construction cost. Understood? Land is a separate asset. And adding building on land is not improvement. It is a separate asset. Answer would have remained same, but still you will lose marks for classifying it under cow. Clear? Question number 92.
What would be your answer in question 91 if Mr. X is a real estate dealer?
If it is real estate dealer, then stamp duty value does not apply. Applies or does not apply? One thing I can tell you, the only hint that I can give you is this answer will be PGBP. Because real estate dealer. So will we take actual sale consideration 25 lakh? Will we take actual sale consideration 25 lakh? अब बोलो सर, yesterday's PDF is not received. This was done 1 day prior to that. बोलो. Let's play reels on the projector. Let's watch them jointly. Because this is your condition in capital gains. Same as. Why? Because section 43CA has got all the same rules as section 50C. So here also your answer will be 94 lakh. Just like stamp duty value is applicable in your capital gain computation, it is also applicable in your PGBP computation. Correct hai? This is your selling price. Here we don't say SC and CO here. Here we say SP and cost. And can we say same cost 2 lakh and 4 lakh, 6 lakh rupees? Yes or no? No. Gadeda, that land ka cost will be 1 lakh and building ka cost will be 4 lakh, giving you total cost of 5 lakh, because FMV option is available in capital gain. FMV option is not available in PGBP, and therefore this 1 lakh will be your answer. Now, had this been a sale before 23rd July, so here I would have done indexation, but this would have still remained the same, because these are the differences. The only thing that is same in PGBP and capital gain is this part. There is no concept called FMV option or indexation ever under PGBP. Is that clear? Hello, everyone. Fantastic. So this brings us to a stage where we have done a respectable number of questions. I still want to give you one last chance, because your current condition is not permitting me to go further as far as question solving is concerned. So I will complete my exemptions, which will leave me with no time to do more questions today. So whatever are the remaining questions of capital gain, I will complete all of them at one go tomorrow. But then I'll complete. See, my chronology is very clear. I will be completing your exemptions today. Tomorrow's class I will be starting with stock market, finish that, then I will come to the balance questions. So that second half of tomorrow's lecture, whether it will be questions of capital gain or IFOS ka chapter, is in your control, not in my control. You make stupid mistakes like not knowing, chalo, this was tricky, that you did not realize ke ha sir in PGBP we don't have option direct cost, but you cannot not know a concept or a section taught to you that capital gain ka stamp duty value is also applicable in PGBP for developers, because that is taught to you. So whether we will do IFOS or whether we will do questions of capital gain will be depending upon your effort between today and tomorrow. For now, I will take a break, small break of 10 minutes, so that I can start with your exemptions after the break. Okay, let's go ahead, ladies and gentlemen. We, under computation of capital gains, have completed GSC, transfer expense, NSC, Kawa, Kawi. Correct? Last part in the computation, and of course after this only the special case of stock market. So last two concepts. First, the exemptions from capital gain. The moment you see the word exemption as an assessee, your instant reaction is natural. Why? What do you mean by exemption? We don't have to pay tax on our capital gain here. But these exemptions in capital gain chapter are divided in two categories. Category 1, the section 10 exemptions. Section 10 we have seen before. Section 10 is exempt income. Some clauses we studied in section 10. At that time only I told you some clauses will be studied in specific chapters. And now we know in salary we did gratuity, pension, leave encashment, everything. So capital gain related exemption will be taught in capital gains chapter. And there is one more kind of exemption. I call it the section 54 series. Now, why series? Because section 10 is one section, all other things are its clauses. 10.1, 10.2, 10.3, 10.4, they are clauses. But in the 54 series, we have section 54, 54B, same, no? B, 54, 54, no? So they are different sections. 54, 54B, D, EC, F, different sections. Long range of sections. Section 10 is only one, but 54 is a long lasting series. There are two types of exemptions that you are going to be getting under the chapter capital gains. Type 1 exemption, section 10. Type 2 exemption, 54 series. Sir, what is the difference? Section 10 is real exemption. Like actually it is exemption. Section 54 series is a scam. They are called exemption, but actually they are deductions. Called exemptions. In the law, they have said exempt, 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 exempt. They're not exemptions, they're deductions. You all know the difference between exemption and deduction? When it is an exemption, we say this amount is exempt, zero. When it is a deduction, we first write the income that will come in the total and then we subtract. That is deduction now. 54 series, they only call exemption. Actually, it is deduction. Like section 10 is literally exemption. If my question is on section 10, I will say this income is exempt under section 10, 0. But 54 is not like that. 54 is a little different. You know the difference between pure ghee and dalda ghee? बस वही है. This is pure, no mixing, bro. Pure stuff. And this is mixing, bro. This is impure. I'll explain. If the question comes on this, do not calculate your capital gain. Your answer will be this amount is exempt under section 10, amount column 0. But if the question comes on this, bro, you will have to calculate your capital gain. When I say calculate capital gain, that means can I say you will have to do SC minus COA? This amount will come in your income, in your outside column, in your total column. It will come. Now there is a twist. And this explanation, please listen carefully. Because if you understand this explanation, then whether 54, B, D, EC, they are all linked to this common explanation. They are just different sections. But this is common in the entire 54 series. You have transferred a capital asset. Therefore, there is capital gain. But the reason for that transfer was not that you will bring the money home and you will do a shower of money on yourself. Kyun paisa? You don't have that intention. Your intention was to buy a bigger and better asset. Supposingly, you want to buy a new house. In a city like Mumbai, if I think that I have to buy a house with my own money, zero inheritance, then I will have to first sell myself twice. So normal people will be selling some asset. You have one old house that you will sell. With that money, you will buy a new house. So when you sell your old house, the intention of selling your old house is not to bring the money home and enjoy that money, was to make a better investment. And if we start taxing the gain on your old house, then the cash flow that you will have will reduce. Then your investment will be a trouble. So if the intention was to invest in new asset, whatever you invest in the new asset will be subtracted from the capital gain of your old asset to give you your taxable capital gain. Means this is your 54 series, and therefore your 54 series will come only and only if you made this investment. Only if you made this investment. Supposingly I don't buy that new house, my full capital gain is taxable, it is not exemption. What is a deduction? Which I will get on the basis of my investment. That is deduction. Now, when we solve the question, what we will say? Capital gain of the old house minus investment in new house. We call it exemption under section 54. We will write in our answer paper exemption under section 54 because the law has used the word exemption under section 54. But only people who have technical knowledge, you and me, know that they are only using the word exemption. This is a deduction which is available only if there is investment. In case you have not made that investment, the capital gain is going to be fully taxable. The capital gain is going to be fully taxable. Do you understand this, Mitro? 100%? And which is why I say this is real exemption. This is only and only if you make investment, and therefore they are called exemption. But actually they are, of course, one thing is common, you will save tax in both. But here without any calculation, because this is pure exemption. But here only and only if investment is done, which means that if there is no investment, you don't get 54 series benefit. Deduction you will get only if you invest. That investment amount only will become your deduction. If no investment, then zero deduction. But in the answer paper, we will write the word exemption because they have also used the word exemption. Clear, bro? Everyone? So, I want to still summarize for you one more thing. That in income tax, there are 3 ways of not paying tax on capital gain. This will, to a certain extent summarize the chapter also. 1. If the asset is not a capital asset, or if the Transfer is not a taxable transfer. For example, rural agricultural land, I can sell and make massive profit, but I won't compute only, because in these cases, what do we say? No capital gain arise. Capital gain will arise only and only if. So ultimately, we are not paying tax. Even if you sell your rural agricultural land at a tremendously high price over and above your cost, still you don't pay tax now, because it is excluded from the definition of capital asset. Second, your asset is a capital asset and your transfer is a taxable transfer. Therefore, capital gain arise, but it is exempt under section 10. So amount column 0. Is there capital gain? Yes, but it is fully exempt, not dependent upon any investment. That's section 10 for. But has it arisen? Yes. Third, capital asset, tick. Taxable transfer, tick. Therefore, capital gain arise. And the capital gain so arisen is taxable. So what do I have to do? I have to do my sale consideration minus I have to do my कौवा क्या investment? Selling price में से investment? नहीं. You are unwell today. No, you're missing someone. No point. Focus in the class. नहीं तो you will miss your degree. Focus. Is this capital gain? Taxable. Yes. But if and only if I have made investment, so there is a 54 series which will give me a deduction, but on the paper I will write exemption because they have used the word exemption. So yes, still I am saving this much amount ka tax. No? So this is a tax benefit, and of course here the income only does not arise. So ultimately we won't pay tax in 3 ways. First, we won't compute because not arising. Second, we won't compute because fully exempt. Third, we will compute and give you deduction. 3 ways of saving tax on capital gain. Clear hai? Hello everyone, absolutely clear? Fantastic. With this, we go and finally learn our bro, first part, no, not a capital asset or not a taxable transfer, we have already completed. So now we have to go and learn our exemptions. Category 1, the section 10 exemptions. First, I am doing section 10 for 2 reasons. Reason number 1, they are real exemptions. Reason number 2, it's a very small part. We have only 2 clauses here and it will get over. First, we have section 1037. If there is compulsory acquisition, is that a taxable transfer? Yes, of urban agricultural land. Is that a capital asset? 2 things you have to be careful. It is only compulsory acquisition and it is urban agricultural land. Is that a capital asset? Yes. Is this a capital gain? Yes. Compulsory acquisition of urban agricultural land is going to be fully exempt under section 10, means I don't have to make any investment. It is going to be fully exempt from the first rupee without making a single rupee of investment. Fully means fully exempt. Brave. Fully means fully exempt. Compulsory acquisition of urban agricultural land will be fully exempt. Whether it is long-term capital gain or short-term capital gain, fully exempt. Long-term or short-term, fully exempt. Third, but this exemption is available only for individual HUF. This exemption is available only for individual HUF. So true or false? Company firm can't have urban agricultural land. False. They can have, but that can't be compulsorily acquired. False. There can't be capital gain. False. There will be capital gain and it will be taxable. For exemption, we are considering only individual HUF, and that also only if you have done minimum 2 years agriculture. Bro, see, if government has to do compulsory acquisition, they will send you a notice, no? That in 3 months, please vacate. They can't be telling you in the morning that please vacate by evening. We are going to demolish. Bro, if our building is also going under renovation, this was basically to give you an example of repairs of building used for business purposes. If it is revenue expense, then section 31, and capital expense, then section 32. Only for giving you a practical example, we are actually sending the whole building in our of which our classroom is under repair, because we believe in practical oriented teaching. So building is going under repair very soon, you are aware, correct? The society has to give us some time, no, that within this much time kindly get your ACs removed, etc. They can't be telling us in the morning that evening we are starting work. The government will give you some time. Say government has given you 3 months time on your non-agricultural land. So that compulsory acquisition will be taxable. Exemption is only urban agricultural land. So what I do during those 3 months, I start putting some flower pots, some plants. In 3 months, every day I have given some water. Sunlight is automatic. You don't have to give it. Comes on its own. In case you were not aware. So I am giving that. And after 3 months, I say, sir, agricultural land. And therefore, fully exempt. But minimum 2 years you have to do agriculture. Then only it is agricultural. Is that clear? So, compulsory acquisition, is that a taxable transfer of urban agricultural land? Is this capital asset taxable transfer? Capital asset taxable transfer? Yes. Is there capital gain arising? Yes. Yes. But it is section 10 exemption. So, without investment. Clear? Huh? But now, this is the law. Law is over. 4 conditions. Fully exempt, long term or short term for individual HUF, minimum 2 years agriculture. But then there are some twists. No, read between the lines. You got to understand that as well. My question to you is, if I have my urban agricultural land, it is possible that I am doing a voluntary sale of that. Yes. So the transaction will change from this to sale. Is this still a capital asset? Is sale a taxable transfer? That capital gain will be taxable or exempt? Because exemption is given only here. So get this clear. Sale will be taxable. The exemption is being provided only for compulsory acquisition. You have to read between lines to understand what is happening. Compulsory acquisition is going to be exempt, therefore sale is going to be taxable. Second, now I change this from urban agricultural land to rural agricultural land. From urban to rural, that will be taxable or exempt. Ha! If you say exempt, no, I will hit you. Nahin. By chance the land was rural, then it is not a capital asset. We don't even have the option of saying taxable or exempt. There is no capital gain. How can you say taxable or exempt? So the exemption is very specific. Only compulsory acquisition, only urban agricultural land. Sale will be taxable. And rural. See, rural can be sold or compulsorily acquired. Both cases ignore because not a capital asset. Is that clear? First part of section 10 exemption. And there are only two. And for exam, you have to learn only the first part. Second one will never come again. Second one, today is the first and the last time you are learning. There was a land pooling scheme at the time of reconstitution of the states of Andhra Pradesh and Telangana. Once upon a time, there used to be in our country a state called Andhra Pradesh. Hello. Suddenly, it was decided that a particular part of that state will be segregated into a separate state. Andhra Pradesh as a state was split into two states, Andhra Pradesh and Telangana, by drawing a new state border. The state was divided into two. But there are proposals that Maharashtra will be segregated into a separate state called Vidarbha. The Vidarbha region, which contains Nagpur, etc., will be a separate state. The as if it is their birthday cake. Let's cut it. Two people want to become chief ministers. Let's divide the state into two. You be CM here, I be CM here. Just like once upon a time, two people wanted to become prime ministers. So they divided India into two. Like you keep this, I keep this. Age old, it to history, tradition. Pandavas and Kauravas both wanted Hastinapur, so they divided the kingdom into two parts. Duryodhan got Hastinapur and Yudhishthir got, it was Khandavprasth, which he later with his effort made it converted into Indraprasth. They divided kingdom, and even today, you go in the national capital region, you have those two cities even today, Hastinapur and Indraprasth. Go and learn Indian history over there. Anyone from Mathura? No one from Uttar Pradesh here? So Mathura, not near. Oh, UP is a big state in any case. There's so many people. How many again? Arey wah. It will be inappropriate if I say Kaisan ba. Sir, you can't be like this with us. Sorry. I won't do it. Huh? Hello. I won't do it. Oh, Mathura mein Kans ka bungalow, etc. is still there over there. You must be at least knowing, matlab, even if you're not very close to it or no. Demolished Kans ka bungalow? Pata nahi. Bro. I have this bucket list. I want to go to Mathura only to play Holi once. Because it is said that people in Mathura play Holi for 1 week. Flowers ka Holi. Then there is one event where the wives hit their husband with sticks. Bro, that happens here also. Yeah, for that I don't want to go. In my bucket list once, bro, I have been to so many countries, but last 10 years I want to go and see the Ranotsav in Gujarat. Run of Kutch. So many Kutchi students, I always tell them they never take me on. Ranotsav and last, bro, 1 decade since Jethalal went to Pakistan. since that I want to go for Ranotsav. Ye bucket list hai, bro. You know, Uttar Pradesh was divided into Uttarakhand. Uttarakhand came out of Uttar Pradesh. Jharkhand came out of Bihar. Chhattisgarh was a part of Madhya Pradesh. Telangana was a part of Andhra Pradesh. So state border was drawn. By the way, for your knowledge, now I must tell you, this is basic geography, but not a part of tax syllabus, that Hyderabad is not in Andhra Pradesh anymore. Hyderabad is now a part of Telangana and the capital city of Telangana. Andhra Pradesh, I think, follows this multi-capital system. There is a city called Vijayawada. There is a city called Amravati. Amravati is there in Maharashtra also, but there is one Amravati in Andhra Pradesh also. They follow multi-capital system, and I think Vizag, also Vishakhapatnam. I am not 100% sure, but I think they follow multiple capital theory. Like the British used to, once upon a time, they had Delhi and Calcutta as two different capitals. I think Australia still follows it, no? Summer capital, winter capital. Canberra and to hell with it. Point is Andhra Pradesh and Telangana. New state border was drawn. Will there be people who have their land and houses here on the border? So what should we tell the government? Sir, my land is coming. Please take your border like this. Sir, I want to stay in Telangana, so take your border. No, sir, I like Andhra Pradesh more, so take your border like this. So diversion. Play. Sir. Yeah. One tight slap I will give you. Speak what you just spoke. Huh? You wait. I am taking you home after class. And your home, nahi, my home. Nahi, audit ka lecture you bunk. There won't be diversion, bro. The border will be drawn as it is. We request you to kindly cooperate because we want to create the new state of Telangana. Government did something called land pooling. They decided that this is going to be the border. So they took up all the land to draw the state border. And people who were having their land building on that border were given, of course, compensation or alternate accommodation in one of these states. This will, of course, result in capital gain of compulsory acquisition, but this was considered as fully exempt. Of course, this happened as early as 2014. So whoever agreed to that land pooling scheme at the time of 2014 got that exemption at that point of time. Today, 10 years down the line, for all theory and practical purposes, it is irrelevant. Whoever took the exemption took it in that year. Now, again, we are not making another Telangana. Hello. So that is over. So for exam purposes also, you have to focus only on section 1037. That is compulsory acquisition of urban agricultural land. Is that clear? And now, ladies and gentlemen, let us go to the second part. I will call it section 54 series because a long range of sections, 54 is one of them. Hello. But what is common in all of them? By the way, I must tell you that we have 54. We have 54B, D, EC, F in inter-syllabus. In final, we have G, GA and GB also. But these three are not in inter-syllabus. So we effectively will be learning 1, 2, 3, 4, 5 sections of 54 series here. What is common in all these 5 sections? You have transferred. Understand the common aspect. Because this logic is same in all. Slight data change will take place, certainly, of course, because they are different sections. But the common link between all of them, there is something drastically common here. Listen to this. You have transferred an asset. Asset is capital asset. Transfer is taxable transfer. That means there is capital gain that has arisen. That capital gain is taxable, not covered under section 10. But what you are doing with that money in all these sections, that asset sale money you are investing in another asset. And the amount invested will be subtracted from your first capital gain. Investment of new asset will be subtracted off from the capital gain of the old asset is common. What is different? Sir, the asset sold and the asset purchase is different. For example, 54, the most popular of all, most popular in exam life and real life. You tell anybody that you are doing CNO, first thing they will ask you about this if they are doing a property deal, that they have sold a property. With that money, they have acquired another property. So whatever they invest in the new residential house will be subtracted from the capital gain of the old house. Wherever you see people around you selling their old house and buying a new house, they are all falling under section 54. One more time, you get this opportunity to go and have conversations with people on taxation. If you see people around you doing property deals, so you share your new education with them. You tell them that yes, you will be eligible for exemption provided you buy the new property within this much time. How much will be the exemption? What are the other conditions? You will now know all of them. And when you start talking about, because people at home have assumed that you are bad debts written off, you are their abnormal loss, they have got zero expectations from you because you have not done also anything substantial to prove them wrong. Go bloody hell, talk to them about this. First, extract from them. If you know that they have some awareness about property deals and the corresponding exemptions here, try to extract some data from them. Yes, and then there will definitely be some error in their knowledge because their knowledge is partial knowledge. You rectify that. Then you tell them, whoever they are, your family members only, tell them that verify this from your CA. They will realize that what they were saying is wrong and you have basically rectified. Slowly and gradually, you actually start generating respect for yourself. And believe me, ladies and gentlemen, your family members will also start valuing you only when you go somewhere out, do something substantial, and with that, they can proudly tell the whole world that you are their child. Unless and until you do something like that, no, they also don't have, too many good things to say about you. This is true. So go and have conversation. The most popular of all, sell a house and with that money, buy a house. What will change? The asset will change. The asset that you are selling, the asset that you are buying will change in this section. The time limit to buy the new asset will change. In some of them, the calculation might change. Certain things might change, but the basic crux will remain same. And the basic crux is what? You have sold one asset and with that money you have acquired another asset. Investment in new asset will be subtracted from the capital gain of the old asset. Understood? Let's learn them one by one. 54 we will take as base because 54 will explain all the conditions to us. And then in subsequent sections, we will only see what is changing. Which asset sold, which asset purchased. Only the changes have to be studied because the basic structure is going to remain same. Ladies and gentlemen, the first section in this sequence, section 54, transfer of residential house. Is it a capital asset? A personal immovable. And is this a taxable transfer? Yes. Is there capital gain? Yes. And is it covered in section 10? No. So is the capital gain taxable? Do you want to save tax is a question. You have the option of saying no. Do you want to save tax? How can I save tax on this capital gain? Let's see what section 54 is saying. But of course, 54 series means investment is required. Without investment, it can't be. Okay. Conditions. First, this exemption under section 54 will be given to any assessee who is individual or individual or HUF. So you individual HUF. What great thing you've done in your life? Transfer of a residential house. Is that going to trigger capital gain? Yes, we will. This is the basic structure. We will reduce that capital gain by the amount that you have invested in the new residential house. Very popular way to refer to section 54 outside this classroom. Sell a house, buy a house, sell a house, buy a house, sell a house and invest that money in another house. What is the logic of this exemption? Everyone else will just tell you what is the law. We want to know why is this exemption being given, especially why is this exemption given only to individual HUF, because we see individual HUF. So very important question arises, true or false? Firm, AOP, LLP company can't have residential house. They can for their employees, correct? But they can't sell it. They can sell it, but there won't be capital gain. There will be capital gain. With that money, they are not allowed to buy new asset. False, they will of course buy new asset, but exemption is not required or exemption is not going to be available to them. Sir, why? Only individual HUF. See, I am writing individual HUF means for exemption only individual HUF. Transaction anybody can do. Why this exemption will be given only to individual HUF? Why not firm? See, understand. The whole idea is that my old house is insufficient. Therefore, I want a bigger house. Company firm will have house for employees. If their old house is insufficient, that means they are having more employees. That means their organization is growing. Therefore, you are selling old house and buying new house. Plus the new house that you will purchase, you are giving to your employees to live. That means you will consider it as a PGBP asset and claim. Already you will claim depreciation on that. But individual HUF don't get to claim depreciation because it is personal asset. So company firm already getting some tax benefit. Therefore, this tax benefit will be given only to individual HUF. Logic. Only individual HUF. Because as their family grows, the existing house will be insufficient. So you have to, in order to buy a new house, you will have to first sell your old house. You know, my father purchased his first house of Mumbai in the year 2004. In 2004, and basically with zero inheritance, you also did not get anything. Because when you are children of two honest people, no, there is problem. I must have told you the chronology. Freedom fighter, government officer who never took any bribe, businessman and chartered accountant. So chronologically, it has always been 0-0 inheritance. So he came to Mumbai to pursue CL. He had difficulty because he was from Hindi medium background. So he got accounts mein he used to get more marks than his entire class. And then there used to be subjects like business communication, law, etc., which had to be written in English. He said that with the time I developed my English skills, but that was not good enough to clear the CA final exam. Intermediate he had cleared. I said, don't worry. You sent me to a good school. I will do that for you. When my father purchased that house in 2004 and having your own house in city like Mumbai, that also in South Mumbai, without any inheritance, is in itself a big achievement. Believe me, next time you think of going and telling your parents, what have you done for me? Because this generation has this habit. You bro, first try to buy, forget a house, buy a hut with your own money in Mumbai city. Bro, buy in any village with your own money. Zero inheritance. Then you'll automatically come to know what they have done for you. When he purchased, we are Marwadis, so everyone wants to interfere in our household. The whole community interferes. So, people in the community used to come and ask my father, what are you doing, Surana ji? Why are you buying such a big house Your kids are 20 years ago, no? 20 years ago, your kids are so small till now. Why do you want such a big house? You understand buying is a one-time cost. Maintenance is a recurring cost. Again and again, you will have to incur so much on maintenance. You'll probably have to keep more expensive house helps to maintain that house. Traditionally, Marwadi families have stayed in very, very closed houses. You are giving the facility of bedrooms to your children. That is going to spoil their culture. They may not be under your control. In those small houses, everyone used to sleep in the hall together. So you will have some control over your children. Why are you buying it? But then my father was always like this. I'm only a cheap copy. He's like, listen, am I asking for any loan from you? No. Am I asking for any help or gift from you? No. Mind your own business. So don't teach me what to do, what not to do. Clear. And not behind the point blank. Don't teach me what to do. Clear cut. Because you never realize how time does not pass, it flies. 2004 and 15 years later, 2009, and time passed. In no time, I got married. Still, 2 bedrooms enough. भाई को बोला चल go sleep in the hall. Now he was supposed to get married. Now what? Now what? And you can't be telling your parents to vacate their room. Bro, you who? So now finally we realize that time passed, but now that house is indeed insufficient. Now as the family is growing, you will need a bigger house. After a point, you will not be able to survive in the same house. Then the ordinary options in Indian families are either you split your family or you move to a bigger house. And for moving to a bigger house, you have to sell your old house. Unless you are Tata, Birla, Ambani, that without inheritance you can manage. Sorry, with inheritance you can manage. Normal people without inheritance buying own house, very difficult task. You have to sell. And that happens in individuals because individuals family grows. And in HUF, the HUF itself is artificial person, but the F in HUF is not that F. HUF ka F is what? HUF ka F is what? Family grows. No, the house is required. And therefore they will have to sell old house to buy new. And therefore there is exemption only for individual. There is logic behind everything. You need somebody to identify that logic for. Understood? So you who. What great thing you did in your life? Transfer of residential house. This asset that you have transferred, your old house in the example here, has to be a long-term capital asset. That is, this has to be a long-term capital gain. We were giving you exemption. Remember, we are giving you exemption. And for that, I am telling you the conditions. So you will get this only and only if it is long-term capital gain. Asset is long-term, so gain is long. Only if your asset is long-term. First, let us understand what is the meaning. Then we'll go to the logic also. When you transfer your residential house, the gain can be long-term or short-term. Here they have written long-term. Long-term matlab after 24 months. So true or false? You can't sell your house before 24 months. You can. There won't be capital gain. There won't be capital gain. False. There will be capital gain. But with that money, you can't buy new asset. False. You can buy new house. But you will not get. You won't get exemption. For exemption, the capital gain has to be long term, which means if you sell your residential house before 24 months, this you go and talk with people at home now. They will tell you, no, ghar. If we sell and then when we buy, we get tax benefit. No, nahin. The one which you sell has to be held for more than 24, then you will get the benefit. Go tell them this. Go tell them because they think you are good for nothing, which is true also till now. But slowly and gradually, we are making it false. Go prove this. Are you understanding? So you won't get this benefit against short term. You will get this benefit only against long term. That's the law. Sir, what is the logic. See, what was the whole idea behind this exemption as I explained in the definition of assessing? That your house is becoming insufficient for you. And when will a house become insufficient? Family will grow. Bro, family cannot grow automatically overnight. For family to grow, it takes some time. Bro, कोई magic button है क्या? Is a tubelight? You press a button and it starts. Akash. Bro. हाँ, Akash का family can grow overnight. But we are talking about general provisions of income tax. I'll talk about, supposedly my father purchased our house in South Mumbai 2004. In 2019 it became insufficient. ऐसा नहीं कि 2004 my father purchased a house. Then in 2005 he realized, hi, counting mistake. I did not count number of family members correctly. So in 1 year the house is insufficient. Arey bro, counting mistake? My father did not have any such fascination. Any weird fantasies. Counting mistake means at that time we were four, so we were four only. Then in 2004 we were four. In 2005 we became 40 suddenly from nowhere. And therefore that house is insufficient in 1 year. That house cannot be insufficient in 1 year. It took 15 years for the family to grow. 2014 I got married, 19 and my brother was going to get married, 19 beginning my son came. ऐसा करके slowly and gradually members got added. Then the house became insufficient. Because space is same but people have increased. So the per capita square feet is decreasing, you understand? Total area divided by total people. Simple maths, bro, arithmetic. So if denominator will increase, so per person size will reduce, no? So it takes some time for house to become insufficient. And still if in 1 year you realize, oh my god, counting mistake. So sell your house. That's not prohibited. Buy another house. You will just not get the exemption. So you individual HO, what great thing you've done in your life? Transfer of residential house, which was a long-term house. Now do you want exemption? Yes. How will you get your exemption? You will have to purchase. You will have to acquire another residential house. Acquire another residential house, which is why 54 is famously called as sell a house, buy a house. Sell a house, buy a house. With the sale money of your old house, acquire a new residential house. Now, once upon a time, a controversy took place because the law is unclear. Sir, what do you mean by another? Supposingly, I sell one house. With that money, I buy one house. So, new house ka cost can be subtracted against old house capital. Fantastic. Supposingly, I sell a bigger house. And with that money, I buy two small houses. So, capital gain on the big house. Investment in two small houses. Will I be able to subtract both investments here? Think about it. Now, the taxpayer, this is actually court case. The assessee said, I will take exemption of both houses. Because another word is unclear. Another means a singular or plural. Singular or plural. Another word means what? Taxpayer ka argument, please understand, it's a court case. Taxpayer says, sir, if they write a residential house, a indicates one, but another can be one or many. I will take benefit of both. Matter went in the High Court, Karnataka High Court. Karnataka High Court actually said assessee is right, and you will be allowed to take assessee is allowed to take benefit of both houses. So sell one house, bigger house, invest in multiple houses, and take the cost of, in fact, 2, 3, 4, 5, take the cost of all the new houses as subtraction against capital gain of your old house. Who won the case? Assessee. Fantastic. Then one day Jetli ji came. And Jetli ji said, nahi, ek minute, time please. Nahi. I think you all are not clear about the law. Because you all are not clear, let me make it clear. Jetli ji did this. He said, here another means one. In case there is confusion, let me get it clear for you here itself. Jetli ji, what do I do, bro? Jetli ji. He actually wanted to say a bad word. Nice style, huh? Next time we will not use the word customer. Good, good. Jetli ji made it clear by saying only. So true or false, you can buy only one house. No. You can buy as many, but take benefit only of your brain, little brain, akkal, thala chor. Thala chor. Which one you will take as exam? Higher value, no common sense, samanya bodham. Higher one you will be taking, no bro. To me, every student is equal, online, offline. समझ लगा? Not that I am talking in Malayalam, so I will not talk in Marathi. Nagada karun pokal bambu. Let's respect all the religions that pay us. Let's respect all the cultures and languages that pay us. Simple. You will take one which is the highest. Common sense. And then when Jetli ji was on his amendment job, he added one more point. That also the new house has to be an investment made in India. So true or false? If I sell a house in Mumbai, I can't buy a house in Dubai with that money. False. I can buy, but I won't get exemption. Understood? After the amendment brought by Jetli ji, let's make the following things clear. I sell a house, buy a house, and assume that individual HU of long term. Okay, all the conditions have to be fulfilled. Sell a house in Mumbai. I can buy two houses. I purchased two houses, one in Dubai, one in Delhi. I'll get exemption of Delhi, but the Dubai one is more expensive. Still the Delhi one. Fantastic. Because only in India, outside India not to be considered. I sell house in Mumbai, buy one house in Delhi, one in Pune. Can I take exemption of both? No, I can take exemption only one. Which one? I don't say Delhi because it depends on the cost. Whichever is higher, I will take the tax benefit of whichever is higher. Ye clear hai? Everyone? So, I will get exemption only of one house, provided that house is in India. I can buy whatever I want, but for exemption, I will consider one house in India. Is that clear? Is that clear? Is that clear? No, this point is still not done. Then, one more clarification I want to give you. Supposingly, you have adjacent units, houses which are attached to each other. Example, we have got something called a Jodi flat. Two houses which are next to each other. Those who have understood little bit of house property know that we don't call them two houses, we call them two units in one structure. Or you can have something called a duplex, one above the other. It can be triplex also. Jodi also, three flats in one line also possible. Are they next to each other or one above the other? Is it possible that they can be converted into one? Can they be converted into one? Listen, I'll make one more thing clear. The rule is that possibility of conversion. You don't have to actually convert them. You don't have to actually demolish the partition wall. You don't have to actually create a staircase in between them. Is it possible whenever I want, I can merge them? So they will be considered as one house. They will be considered as one house. And therefore, you can say you get exemption of both because we are counting them one. In fact, both is also an example. Is it possible that I have three houses next to each other that I have purchased? And there is one common wall which can result in merger of all of them. Can I merge them whenever I want? Actual merger is not required. Actual breaking of wall is not required. If I want, can I merge? Even if I purchase the three houses from different people on different dates, different amounts, different agreements, they will be considered as one house, giving me exemption of all of them. Means supposingly I buy this house 1 and 2. Can I take exemption of both? Yes, because they are one house. Supposingly I buy this 2 and 3. Can I take exemption of both? Yes, because I can merge them into 1. If I buy 1 and 3, if I buy 1 and 3, can they be converted into 1? No. No. Then there are two houses. I can take whichever is higher. Of course. Don't say, sir, what if I make a separate route from here passing through house number 2, because you always say maintain cordial relations, love thy neighbor, maintain cordial relations with your neighbor. In any case, we have a secret door only, me and her know. But then you can't be openly showing it to the tax department, no. That secret door has to be kept secret, no. So you will get exemption only of one of them. If I tell you the structure of houses where I stay, every floor has got 4 houses. 2 houses are on this side of the floor and 2 houses are on this side of the floor. There are a lot of people who have merged these 2 houses, made them one, merged these 2 houses, made them one. So if I supposedly buy these 2 houses, or if I buy these 2 houses, can they be converted into one? I'll get exemption of both. Are you with me? But supposedly I buy these 2 houses, I can get exemption only of one, because I can't convert them into one. Up and down, so you can convert. No, you can have an internal staircase. Chalo, up down ka bhi I'll give you. Flat number 101, 201 and 301. No, floor wise. Here we would have said flat number 101, 102, 103. Same floor next to each other. But now they are one above the other. Now if I buy 101, 201, counted as one, exemption of both. 201, 301, counted as one, exemption for both. By the way, actual creation of way is not required. Can you create when required? Yes. But if I buy 101 and 301, then I'll get only one of them. Or I'll give you better idea, buy all 3. Then you get exemption of all 3. You understood or no? If they can be converted, actual conversion is not required. If they can be converted, then they will be considered as one house, which means you will be able to take exemption of more than one. Normal rule is only one, only one, only one, only one. But if they are next to each other, they are not considered as 2, because they are 2 units. They will be considered as one. Adi Manav. They will be considered as 1 unit. And what a life lesson. Oh boy, what a life lesson, income tax law. If you have, see, Indian household, let's not reveal, internal stories. But the fact is that if you have parents and siblings of your parents who are not talking to each other, your parents not talking to their brother, sister, then show them this. Show them what income tax law can do to you. I'm not asking individually, because some places, even if you try to convince, it is not going to work. For example, my mom's brothers, it is not going to absolutely work in those cases. But this generation can actually go and awaken and understand that when you are united with your own sibling, no, you can go and defeat the king of Lanka. We have discussed this. He was superior in all forms, knowledge, wealth, everything. Bigger army. But then what made 2 Vanvasis go and kill the king of Lanka is because his brother revealed all the secrets. Also, what a popular proverb in the Hindi language, Gar ka bhedi Lanka hai. The whole, for those who were not aware, kids, the idea behind this proverb was the story of Ramayana. Bhedi is someone who knows your secrets. So anyone who knows your internal secrets will result in your demolition. Ghar ka bhedi Lanka hai. Go tell your parents to unite with their siblings. You never know. One day you will only get information about your siblings. One day you will only get news. And that day in social pressure, you will have to go and be present. Why? Supposingly, 2 brothers owning one house, not being able to share cordial relations with each other for one reason or the other. So many reasons in Indian households. And there is this tendency of generally putting the blame on the spouse, which is unfortunately not true. Sometimes it is the spouse who basically puts efforts in uniting. The brothers are senseless. They have some problem. The spouses are actually trying to unite. Believe me, in my house, it is like when my fight starts with my brother, if you observe that fight in 10 minutes, you will feel that today partition will take place. And if you see me fighting with my brother, no, you will genuinely come to a conclusion that was the family is going to split. Is the way in which we fight. Of course, we don't give each other bad words on parents because ha, अरे bro, my mamas, no, my mothers, they are senseless. They abuse each other on parents ka gali, not realizing that it is hitting them as well. But that we don't do amongst ourselves. And then what happens? See, there are two types of spouses. One, the spouse will take you separate and then tell you, good, he is like that only. Nice. Next time say this also, that also. So then basically the family will certainly split. What happens in my house? The moment we are separated by someone, my wife, she will shout at me, double people, you have common sense. He is your younger brother. You have to be like a father. Do your duties. You can't help him, at least don't fight with him. You have any sense? His wife. Do you have brains? He is your elder brother. Who talks to elder brothers like that? You have to respect him like you respect your father. If you will be united with him, then you don't need anybody else. Is how our spouses shout at us on. Mom also shouts at us on. So finally, we only have to patch. So let's not unnecessarily put the blame on the spouses because it's not the same story everywhere. Let's not put that blame. The point is that if you are united with your brother, just imagine you sell your bigger house. You want to separate, no, because you're not uncomfortable. You're not comfortable with each other. Buy two houses next to each other now. Let the internal wall remain because actual demolition is not required. Supposingly you are in some bloody emergency, you don't have to approach the neighbor also because your brother is there with you. Don't like to talk to each other? Have separate kitchens. But in times of emergency, you will be there for each other, no? You don't have to rely on anyone. And bloody hell, if you don't understand anything, at least take the tax benefit by buying these two houses. Income tax law is trying to make you understand, stay separate but stay together. If the two brothers buy the houses at different places, you get exemption only of one. But if you buy next to each other, don't convert them into one, but at least buy next to each other. Don't see each other's face, but at least stay next to each other. Take tax benefit of both. Life lesson. Can't be a better lesson than this. Because if you are united with your brother, you can fight the whole world. Bloody hell, you can fight the whole world. Or, thoda sa awkward, but the truth is that I told you that I will be a father like that. So I will take my son only. Saturday evening, I just told you, last class only I told you. But then he is 6 years old, no? Just imagine me going home and asking him, Chalna. So he'll be like, okay, daddy. Obviously, at this age, I can't. And till the time he turns 18, bro, that is still 12 years away. How much will be left in me, I don't know. So why to wait for so many years? Why to wait for him to grow up? Go home and tell your brother, Chalna. He is too much into fitness. Bola, ठीक है, चल, bring me home. Best part is that, you take your friend also with you somewhere. So poor guy friend has to first drop you home, then go to his home. Brother, there is no problem. He anyways has to come here only. And even if you are next to each other, then also no problem. How easy it gets. Always be the best friend of your brother. And this is why I say that generation had some problem, some mental issue, some ego problem, some financial problem, some family problem. But this generation is beyond all that. This generation is what I don't want. Believe me, this generation is not a greedy generation. This generation says, you keep everything. I'll manage. Not all, but most. You go and make your parents understand. One day you will get their news. Let's finish this. Some cases, they won't understand. I know that. Okay. That also I have experience. But you try to the best possible extent that you can. Bro, forget everything else, at least for tax benefit. Because if the two houses are next to each other, they will be considered as one house. And you'll get exemption of both. And two is also an example. It can be 3, 4, anything. Everyone is clear. So you. Individual HO, what great thing you've done in your life? Transfer of residential house, which was a long-term asset. Now you want exemption, so do what? Invest in another house. Exemption you will get only of one. That has to be in India, and next to each other will be considered as one. Next to each other will be considered as one. Correct hai? Everyone? Now, one thing is clear, that unless the two houses are next to each other, you will get exemption only of one. Correct? Here comes 2019. 2019 was that year. We already saw that. 2019 was that year in which one SOP became two SOP. Because 2019 interim budget was presented by Piyush Goyal sir. He brought only 10 amendments in income tax, because real amendments come after budget, no? Sorry, after election. 2019 was election year. So Modi ji appointed Piyush Goyal sir because Jetli ji was unwell. I have had this discussion with you in House Property also. CA Piyush Goyal sir, all India rank 2 at CA final exam. Modi ji said, see Piyush Goyal sir, I don't have to make you understand income tax, because I also don't know anything in income tax. You are a chartered accountant. You know everything. I just have one instruction for you, Piyush Goyal sir. फिर एक बार मोदी सरकार. Now do whatever you want. I just have one thing, Piyush Goyal sir, that आएगा तो मोदी. Then you do whatever you want. Is the simple instruction. So basically, that interim budget you can call a lollipop budget. It was that interim budget where Piyush Goyal sir made एक का double, one house property became, मतलब one SOP became two SOP. Now comes capital gain chapter. Jetli ji said what? Maximum one. Piyush Goyal sir said, once in a lifetime, you can't take this benefit again and again. Once in a lifetime, I will allow you benefit of two houses. Again, ek ka double. You know Anuradha? Anuradha? No? No problem. Google ek ka double Anuradha. Google this, huh? 21 दिन में पैसा डबल. Ramji Rao calling. The Hindi version of it. Ramji Rao speaking. Google Lakshmi Chit Fund. Chalo. This is the easiest of all. Lakshmi Chit Fund. Anuradha. Okay? Yeah. After class, huh? He's like stopping his video now. Kaisa roko 2 minutes. I'll Google and come back. No. Focus on the class. Two houses I will give you. Now, budget announcement. You understand? The favorable things, they will make tall announcement. I hereby propose. Now that some of you all saw the budget speech with me, so you know how finance minister talks. I propose. Budget propose. I propose to make two houses exempt under capital gain. And the moment a favorable provision comes, people sitting in the parliament, most of them understand. Most of them don't understand anything. Tang, they understand. Hey bro, I said tang, not ting. Most of them don't understand anything. The moment Piyush Goyal sir said, what? Two houses. That's how they start appreciating in the parliament without knowing what is happening. And 2-3 start, no. They, basically that first bench wala route. That first bench is banging the table. First bench contains the biggest leaders. So Prime Minister, Home Minister, Defense Minister, they all sit on the first row. First benchers. Okay. Back benchers don't know anything. They are clapping. Chalo, let's clap. In parliament, they don't clap like this. They clap like this. Funny, many times you watch parliament TV, you watch on you whenever you are free. Okay, budget to is something the area of interest now. General parliament debates, how one person speaks, how another person is continuously disturbing in between, how they don't let each other speak, they shout loudly. Then literally like a class teacher, the speaker of Lok Sabha says, hey, chup, hey, chup. You don't speak out of turn, I will give you turn later. Like literally school mein class teacher discipline, members of parliament have to be disciplined. Believe me, it happens like that. And some of you all had a real-time live experience of that. budget. वैसे parliament is in session, तो every day some debate or the other takes place. You can randomly watch any debate in the parliament whenever you want. When that Jammu and Kashmir ka reorganization took place, so what the home minister came and he said in the parliament and जान दे देंगे इसके लिए. All that is available on record. This is all parliamentary proceeding. You don't know जान दे देंगे इसके. Then someone asked him that why are you getting so aggressive? And मेरी आवाज ऐसी, my voice is like that. He did that. Correct or no? So Piyush Goyal sir said 2 houses. Everyone started appreciating. Listen, now this time the 2 houses can be away from each other also. I will give you the tax benefit of both. But this you can do once in a lifetime. You sell a house, every time you take 1 house ka benefit. Next to each other is 1 only. That is not 2. But away from each other, you can take both. Once in a lifetime. So everyone got excited. Wow. So now I can take 2 houses at 2 different places. But one thing which he did not announce in the budget speech, but brought an amendment with this, he said, this benefit will be if your capital gain is up to rupees 2 crore. If your gain is up to rupees, matlab one thing is for sure, that the maximum tax benefit that I can get is this. See, if this was not there, it is possible that I have capital gain of 10 crore. I buy 1 house of 5 crore, another house of 3 crore. I take total benefit of 8 crore. No, I am not allowed to take benefit of 2 houses if my gain is more than 2 crore. So if my gain is 2 crore or less, what will be my capital gain ka column? 2 crore. From this I am subtracting my exemption. Then that exemption can never exceed this amount. Sir, 2 kya you give 20 houses? No, like that. Ultimately, the amount of exemption will be restricted to this. Do one thing, remove the limit of 1 house, etc. Do one thing. Hello. Perfect. Take it. So do you understand? Like that, we can give you exemption of 20 houses also, but restrict the benefit to 2 crore. That means you can't be taking tax benefit of more than 2 crore even if they are allowing 2 houses. But this he did not speak in the budget. You understand? Hello? Smart chat. All India rank 2 at CA final. Has to be smart. And he has said it on record in an interview that costing ka paper last 1 question of 20 marks I could not revise on the last day, and that question was of 20 marks and I did poorly in that one particular question. If I would have revised that concept, there is a concept called integral and non-integral accounting in first. It's there in your syllabus. I think he mentioned that chapter also. So he said that if I would have revised that chapter and I would have scored marks in that question, I would probably been AIR1 as well. And Chartered Accountancy is a course where once you clear, no one is going to ask you anything. First attempt is respected. The moment you are a merit rank holder, you are in some different planet. In that, when you are a single digit rank holder at all the 3 levels, you are in some different universe maybe, bro. And in that, if you are all India rank 1, people do say that MBAs get more salary. Maybe the top 10 MBAs get more salary than the top 10 CAs. But if there are 10,000 people who pass MBA and 10,000 people who pass CA, the last person also know who is just pass at both levels, that CA will earn more. MBAs will earn more than CA, only the toppers. Only the top. Are you topper CA? First rank, all India? Are you? Then you compare yourself with MBA. And I'll tell you what, if you are AIR1 in CA, you'll automatically go for doing MBA in some of these schools. Most AIR1s do. They go for MBA. Otherwise, don't compare. Because if you actually compare only the salary, then also compare the cost of doing MBA. And in CA, you don't have to tell people from where I did it. In MBA, doing MBA is not as important as where you did it from. MBA mein which college is relevant? CA mein. Understood? So yes, All India Rank 2 at CA final has this brain to what to announce, what not to announce. This once in a lifetime. So once in a lifetime. That also only if the capital gain is up to rupees 2 crore. Everyone is clear. So you. Individual HO, what great thing you did in your life? Transfer of residential house, which was a long-term house. You want exemption, then do what? Invest in another residential house, maximum one in India, but once in a lifetime you can take two if your gain is up to 2 crore, and next to each other will be considered as one house. Correct? Eh? Now that you have fulfilled the condition of investment, the next question is, sir, I have to acquire the new house now. In how much time I have to acquire? Supposingly I sell a house today, so I have to acquire new house. No problem, sir. Give me 20-30 years now. I will buy. Hey, this also was there in one of the Bollywood movies. 3 दिन तो बहुत कम है रे बाबा, कम से कम 30 साल का टाइम तो दे. फिर हेरा फेरी होंगी. नहीं, you need some time. हाँ तो take time. 30 years. नहीं ना. It can't be 30 years to acquire the new property. There has to be some reasonable time. There is time limit. Now, when we were doing how to get exemption, someone said purchase. And you observe they have not used the word purchase, they have said acquire. Because acquisition of a new house can take place in 2 ways. One, you purchase the new house. Is that acquisition? Two, you buy a land and on that land you construct your house. Is also acquisition. We are talking about investment in new house, which can be by purchase or construct. If you purchase, then do one thing. Take your date of transfer, which has to be in 24-25 for the question to come in your exam. From that date, we give you a time of 2 years. Means if you are, now you again go and ask people at home or discuss with people at home that, sir, if we sell a house, buy a house, we get tax benefit is maximum, that people know. That only individual HUF, only if long term. Now tell them, go tell them today itself, the tax benefit is only if the new house is acquired within 2 years, or construction takes time. So for construction, we are giving you 3 years. So if you purchase, you have to purchase within 2 years. But for construction, you have to complete your construction within a period of 3 years. 2 years for purchase, 3 years for construction. But in the purchase wala case, there is one more twist. Many a times what happens is, supposingly I am already having a small house and someone comes to me with a really mouth-watering offer for selling his bigger house. I don't want to miss this opportunity. I don't want to miss. I first do the deal with the seller and I first actually buy the new house. But of course, I don't have funds. For funds, what will I have to do? Little bank loan, little here and there, but major thing will come from sale of the old house. So is it possible that I first buy, then I sell? It is possible. See, rarely, normal, general, financial planning, if you ask me, first you should think of selling. Because buying is in your control. Whenever you have money power, you can bargain and buy. Selling is not in your control. Selling is difficult. First sell, be ready with a budget, okay, this much money I have, plus this much bank loan I will take, I have the total budget of this much, furniture, etc. Then go in the market for buying. But if the offer is really mouth-watering, it is possible that you purchased first. We will allow that also, provided after you purchase, you sell your old one within 1 year. If you take more than 1 year, then you will not be eligible. So can purchase happen before sale also? But maximum 1 year. Generally, it will happen afterwards. For that, we give you time of 2 years. So effectively, do you realize in purchase cases as well as construction cases, we are giving you total period of 3 years, but purchase can be, and after today, no. Rest of your life, even in CA final, we don't know income tax law ka, but this is how students speak. Purchase within 1 year before or 2 years after. 1 year before, 2 years after. 1 year before, 2 years after. Or construct within 3 years after the transfer. Purchase within 1 year before, 2 years after. Construct within purchase within 1 year before, 2 years after. Construct within 3 years after. Understood? Purchase within 1 year before, 2 years after, and construct within 3 years after the date of transfer is the time limit. If you do this, and generally people will do in this much time only. If you do this, then only you are going to be eligible for your exemption. So, ladies and gentlemen, you, individual HO. What great thing you did in your life? Which was a long-term house. In order to get exemption, acquire another residential house, maximum one in India. Neighboring will be considered as one. Once in a lifetime is gain. If gain is up to 2 crore, then you can get exemption of 2 houses. To get this, you have to purchase within 1 year before or 2 years after the date of transfer. Construct within 3 years after the date of transfer. These are the conditions. If you fulfill all these conditions, go enjoy your exemption. This is going to make you eligible for exemption. But now comes an important question. Sir, yes, I have become eligible for exemption. But what is going to be my quantum of exemption? What is going to be my quantum of exemption? How much exemption I will get? If I have to tell you in words, the capital gain on your old asset or investment in new asset, obviously whichever is lower. Capital gain or investment in new asset, whichever is lower. Let's understand with the help of an example. Supposingly the gross sale consideration of my asset is 50 lakh 50,000 minus the transfer expense 50,000. So how much is my net sale consideration? 50 lakh. From this, what will I subtract? Kawa, I kawa, based on date of transfer, etc. Say that is 15 lakh. So what is your capital gain? 35 lakh. Correct hai? You want to make this zero? Individual HOF, long term, invest in another house 1 year before, 2 years after, all conditions fulfilled. You want to make this zero? What do you have to do? You have to make investment. So we will go and see what is the investment in new asset. Example 1. The investment in new asset is 30 lakhs. Correct hai? Easy. Matlab new house you purchased what? 30 lakh. Example 2. New house you purchased what? At this stage, some people ask questions. So, if it is only 35 lakh, how you can buy 40 lakh? By taking loan. Sir, एक मिनट. Extra what? Extra जो भी उसके पास क्या है? पागल. Understand one thing. The capital gain is 35, but the cash in hand is 50 lakh. Oh, this 15 lakh was incurred many years ago. Today you have received 50 lakh after paying your transfer expense. So if I ask you what is the gain amount, the answer is 35 lakh. But if I ask you what is the cash in hand, 50 lakh. So you don't need separate funds. With these funds also you can buy. Look, some are like take loan, some are like sir own funds. No, these funds only are available for you. Now please understand, if I buy asset of 30 lakh, obviously I will get benefit only of 30. I can't take 35. So what will be my exemption in this case? 30. If I buy asset of 40 lakh, I can't subtract 40 lakh and say 5 lakh capital loss. Tax benefit can maximum be restricted to the gain amount, and therefore in both these cases, if I am asking you to compute the amount of exemption under section 54, here it is going to be 30 or 35, whichever is lower, and here it is going to be 40 or 35, whichever is lower. So do you understand the statement capital gain or investment, whichever is lower? Whatever you, simple language, whatever you invest in the new asset, you subtract from the capital gain of the old asset to the extent of maximum making it zero. You can't make it, of course, negative. Correct hai bro? Hello. So individual HUF, transfer of residential house, which is long term within the time limit, invest in New house, maximum one in India, adjacent, once in a lifetime, everything done. Quantum understood. That means as a chartered accountant, have I given the conditions to my client? Are bol? And have I also given the computation of exemption? Correct? Oh client, me CA, you client, me CA, you client, me CA, you. Hi client, have you sold a house? Sweets किधर है bro? अच्छा forget it. Time पे fees you give, that is also more important. Have I explained the conditions to you? The assessee, the nature of asset, the time limit, everything. Have I explained the quantum to you? So now can you take your exemption if you fulfill the conditions? And how much exemption to take, that also you are clear. So you can go and take your exemption. Bye. Bye. The client started leaving because I have explained the conditions and the quantum. Just when the client reached the gate, the CA says, hey, wait. wait. Listen, client, I have one warning. Listen, client, I have one warning for you. I have one point to be noted for you, that are you making this investment and taking this tax benefit? So the funds have to be genuinely kept invested. Not that today you buy this, take this benefit, and next day you sell it. You understand? And which is why in all the sections of exemption, there is a condition that the new asset, case 1 of 30 lakh, case 2 of 40 lakh, which resulted in exemption of 30 and 35 respectively, cannot be sold cannot be sold up to 3 years from its acquisition. So from the door only we are talking, hey client, you understood the initial conditions, you understood the quantum, but just remember a client, kya? Do not sell the new asset for a period of 3 years. Then only you are eligible for the exemption. Huh? Now understood the lock-in also. Okay, bye. Now I have explained the conditions, the quantum, and the warning that please make sure that now understand. Talk to people at home. Kya sir? That if you have taken exemption, by chance you are now not happy, you can't be selling it. Because 3 years you cannot sell it. Clear client? Now you can, from my side, buy. This time client waited. No sir. Now I have one query. Last time he was going with conditions and quantum. We stopped and gave him warning, lock-in. Now we told him to go. He is waiting and asking a question. Ask no client. Ask no client. Ask no client, ask. I gave you conditions. I gave you quantum. Before leaving, I gave you a warning. And I told you to leave. But you are not leaving. You are asking a question. Ask no. Okay? Ask no question है Instagram. Ask no. Question पूछना हाँ. So who else? You watch Virat Kohli का reels के रोहित शर्मा का reels? What were you watching when I entered class? Reels. किसका? I saw Indian cricket team का jersey. आता है वो. I also know that. Who was that batsman? Who is your favorite batsman in world cricket? Now Virat Kohli. Correct है? God forbid. 12 standard marks percentage में 84. 10 standard marks. So we'll get this much also in intermediate, no? 84% aggregate. नहीं? God forbid. God forbid. If by chance intermediate result is a little here and there, Virat Kohli won't come and wipe your tears. Guarantee है मेरा. Guarantee है. Challenge है. You take challenge. कि no sir. I will fail and show you, and then see I will call Virat Kohli to wipe my tears. Are you even taking that challenge? Bro, we don't want a challenge. नहीं. So you think about the classroom and a client asks me about it. After I gave you the last warning, that's the best hint that I can give. No question. I'm surprised. Capital gain is logic, nothing else. You want to purposely prove me wrong? No, sir. Try karo na, let it be wrong. Maximum amount of exemption. For now, I have not given you anything. For now, this is the answer. Correct? There is a 10 crore ka limit, but that I will do after 54F because it is there in both sections. Right now, you won't understand. There is no maximum limit. Okay, last best hint that I can give you that the client ka question that is asking is related to the last warning. By chance, during the lock-in period for need of funds or any other reason, if I might have to sell my new property, then what will happen? Do you understand? In case I have done any contravention of point F, that is your lock-in period, if there is any contravention, then what, sir? If in need of funds I have to transfer, then what, sir? The law says that you cannot sell for 3 years. But in case I have to, for need, for whatever reason. So listen, this statement is very easy to understand. The capital gain ka exemption that you have taken earlier, now it will be taxable. Whatever exemption you have taken. By the way, we had 2 examples. Case 1, you took exemption of 30 lakh. Case 2, you took exemption of 35 lakh. You will have to pay tax on that exemption. The exemption will be reversed. Reverse matlab you will have to pay tax. Capital gain exempt earlier will now become taxable. Here, explanation is not required. Now, explanation will be required because they say this will be done by reducing from cost of acquisition of your new asset. This will be done by reducing it from the cost of acquisition of your new. First line is clear before the comma. Sir, if you do any violation or contravention, whatever tax benefit you have taken earlier will be reversed. Sir, but what is the second line? Understand with the help of example. Just to quickly remind you, we have done above 2 examples. This example continued. What was our capital gain in both cases? 35. What was our investment? 30 and 40. Because of this, by the way, do you understand? Investment is cost of acquisition of the new asset. No? The new property ka cost is only our investment. No? And therefore, how much exemption I took in both cases? 30 and 35. This exemption is on the condition that whatever is the new asset should not be sold for a period of 3 years. But by chance, there is contravention of lock-in. Therefore, there is sale. And therefore, first of all, do you understand? There is going to be capital gain on the new asset itself. Forget the old, forget the exemption, forget the reversal of the exemption. Everyone agrees that this asset that I had acquired for taking exemption, if I sell this asset in itself is a capital asset attracting capital gains. Do one thing, compute capital gain on this asset only. Let us assume that the sale took place for an amount of 80 lakhs. Somebody was giving me good money. Just purchased for 30 lakh, 40 lakh and 80 lakh. I am getting more than double. 30 ka 80 or 40 ka it is becoming double. I sold it. I can sell it. Selling is not a prohibition. Problem is that you have taken exemption. So what will we do? Let's do this. Let's compute capital gain on new asset. Okay. What is the sale consideration of the new asset? 80 lakh. I am doing the first one. Second one you will do. What was the price at which I purchased this asset? 30 lakh rupees. That was my investment. You understand? This was cost of acquisition. But my question is, when I purchased this asset for rupees 30 lakh, how much tax benefit I took? So the gain exempt earlier will be reduced from your cost of acquisition. So what are we going to reduce from the cost here? 30. So our cost was 30, but because of that we took exemption of 30. So then effectively in the capital gain we will take only, giving us taxable amount of 80 is the meaning of the statement that we have written. The gain exempt earlier will now become taxable by reducing from cost of new asset. Is this sentence का implication understood? Correct? है? So whatever tax benefit you are taking, if we reduce your cost, we increase your gain. So we are adjusting it. But sir, as Modi ji says, maja nahi aaya. Now you want to see some maja? Oh bro, what a magical calculation. What a magical calculation. Like this literally has two targets with one bullet. You have sold your new asset. Everyone is with me. This new asset is triggering two capital gains. One, actual capital gain of new asset. And two, reversal of tax benefit of old because of contravention. Correct? Eh? The transaction that you have done here will result in paying tax on two amounts. Actual gain of new and exemption reversal of old. Correct? Eh? Now let's decide how much is the actual gain of new. Selling price 80, cost price 30. What is the actual gain of new? 50. Plus we have to also make you pay tax on the capital gain exemption taken earlier, that is 30. The actual gain of new 50. Reversal of exemption of old 30. 50 plus 80. 50 plus 30 makes it a total gain of Jadu. 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 Om, 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 om. You understand the magic of this? This one calculation is going to include both. Old, new, both. Actual gain, reversal, both. Understood? And now the second one you will do for me. Selling price is still 80 lakhs. Come on, tell me. What to do? Sale consideration? 80 lakhs. Next. Cost actually incurred was 40. But because of that, I took exemption of. So effective cost deduction will be only of. Will make you pay tax on. Now see the magic. Actual gain of new is 40. And reversal of gain on old is 35. 40 plus 35. Jadu. Maja? Everyone understood how magical this calculation is? So in case you contravene the lock-in period, you are going to be, what bro? Reversing the earlier exemption by minusing that from the cost of acquisition. The calculation is so magical that it will take care of both. Is that clear? Which brings us to the last point in section 54. And believe me, section 54 takes time because we have to understand the meaning of every concept here. The other sections don't take that much time. Believe me, other sections together don't take that much time. Total time taken by all other sections is less than section 54. Because here we are creating the base of what is 54 series. See, exempt income, you are aware, amount column 0. But these are called exemption actually deduction. So how to make investment, how to minus, every concept has to be taught first time in your life. Now see. Last concept, CG Das. Arey bro, it is not some Bengali with Das sir. Capital gain deposit account scheme. CG Das. Capital gain deposit account scheme. CG Das. What happened? कुछ नहीं. There is one problem in this section 54 ka exemption. And first you have to understand the problem, because if you don't understand the problem, you won't understand the solution. This is my previous year 24-25. Somewhere in this year, I must have sold my residential house. It can be 1st April or 31st March. Let us assume last date. 31st March was my date of sale. 31st March 25 is my date of sale. Now, if I want to get exemption, I can either purchase or construct. For purchase or construction, the law has given me sufficient time to take a proper decision. By the way, if you can quantify that time for me, if I want to purchase, so this is end of 1 year. So I get 2 years ka time here to purchase, or 1 more year. So in 3 years, I can do construct. So do you understand? I have this much time to make my investment. Means from this date to this date, I can make purchase, which is 2 years. And if I am constructing, I have one extra year. Correct? First question is, sir, why are they giving so much time? Because bro, don't forget that in this much time, what you are acquiring is an immovable property, residential house. See, immovable property buying and selling is not buying and selling of peanuts. No. Residential house buying and selling is a big decision. Sometimes though I say, believe me, the fact is that buying a house is also like getting married. I'll explain how. It's a big decision. I am saying what buying a house is like getting married. See if you are able to relate. It's a big decision. You got to know, am I ready for it? You got to know, are my finances permitting the same? You have to take a call that if I do this, will this increase my image in society? What will be the maintenance? House. What will be the maintenance of the house? Don't you think these factors have to be considered? So we have to give you sufficient time. Purchase for 2 years, construct for 3 years, or purchase within 3 years, construct within 2 years. Except those cases who have already purchased. Except those cases who have already purchased. Correct or no? But the problem is that after the previous year will come my assessment. In the assessment year will come John. John is my due date of filing of return. When I file my return on the due date, and by the way, I must tell you that of late our government has become so strict in terms of interest and penalty for late returns that everyone has to file return on time. So do I have to file my return within the due date? Yes, I have to. Yes, I have to. When I file this return, everyone understand please. Do I have to show my capital gain? Yes, because everything done in the previous year has to be shown. I have to show capital gain. That option is not there of not shown. It is also possible that between these two dates, I have already purchased the new property. That is also 4 months. 4 months, maybe you can decide. But the law is giving me time till here, no? So it is possible that there will be quite a few people who have not acquired the new property till here because who are planning to utilize this time limit. So I am talking about someone who till this date has not purchased the new property because of the extended time available. That person, does he have to show capital gain? Yes. Can he show exemption? No, because he's not purchased only. How will you know what price you are going to purchase? It is whichever is lower. No? That means on this date, effectively what will happen with me? Gain will be shown. But exemption I can't take because I have till now not acquired. The gain will become taxable. While filing return, I have to show gain and pay tax. And I'm wondering, what just happened with me? I was told sell a house, buy a house, we will give you tax benefit. Bro, you are taking tax. I thought I will buy within this time. Does the law allow? Yes. But here you are taking tax. Then what's the sense of this time? Dear government, you are fooling me. You are treating me like customer. You are saying that I have been given this much time. But ultimately, if I don't buy till this date, so I have to pay tax. So resultingly, what is happening? This extended time is of no use to me. Ultimately, I probably have to buy in this much time. Now our government genuinely wants to give you this time because immovable property requires that. At the same time, we can't bring a law which says, chalo, this capital gain you show 2 years later. That we have to show now. So we have to do a temporary arrangement. Between this date and this date, we can't force you to buy your new property because that is giving you extra, that we are giving you extra. But between this date and this date, you do one thing, you lock your money at a particular place. And that is going to be a special bank account called capital gain deposit account. Bank accounts are saving FD, RD, current. Some designated banks allow you to open an account called capital gain deposit account. What do you have to do? Listen carefully. I am explaining everything, then writing part will be taken care of. Between this date and your due date of return filing, which can be any one of John, don't keep the money with yourself. The whole idea of this exemption is that you want to save money for investment. So don't bring money home and do money ka rain on yourself. Keep the money in that special account between these two dates. Before your due date, you have to make the investment. If you make the investment, not in the new asset, for asset we are giving you extra time. This investment we are asking you to make only in the special account. We will assume this investment as investment in your new house. And what will we see? Capital gain or investment? Capital gain or investment, whichever is lower, will give you that. Assuming that this investment in the account is actually investment in your house. But this is a temporary arrangement only so that you can file return properly. Show capital gain. Consider this investment as investment in new house. Take your exemption. So problem is solved. But then you are still left with one duty between this date and the time that we have given you. Use this money in the special bank account. Guess kar. To purchase the house. To complete the whole transaction and process. If you purchase the house in this much time or construct the house in this much time, you have done your duty. An exemption to we gave you long ago, so nothing to be done. But just in case the time is over, and we'll wait for this time to get over, because we can't say that you are a violator at the end of this time. Reason is you can still construct in 1 year. But once this time is over, you have not constructed your new house. That means one thing is sure, that now you are not eligible for exemption. So on this date, whatever is the balance lying here, we make it taxable. This will solve all your problems. You can take exemption in your return. Hello? By making investment not in the asset actually, just make the investment in the special account. But between the return and the due date of the section, in this section there are two due dates. Most other sections there is only one date given. It is not 2 years or 3 years, one date. So before that date, or here we will wait for the second date. Before that time limit, use the money, acquire the asset. If you do it, exemption. So we've already given you. If you don't do it, the unutilized balance will become taxable capital gains. This capital gain deposit account scheme will solve the problem of the return filing. The problem now in words is that the due date to make investment for exemption comes after the due date of return filing. So in return, how to show my exemption? By making temporary arrangement of special account. Understood the whole explanation? So very quickly. What option are we giving you? On or before your 139.1 due date. 139.1 due date is return filing? No. John, what to do? Invest in capital gain deposit account scheme. Because for actual asset, we have given you extended time. Correct? Hai? This investment will be considered as investment in new asset for the purpose of exemption, of course, which we will compare with your capital gain, because whichever is lower. But I'll tell you one thing. See, use your brain and understand. When I actually had to go and purchase house, so I purchased of 30 lakhs or 40 lakhs, because that depends on cost of house. Cost of house is 30, my purchase price is 30, I take exemption of 30. Cost of house is 40, I restrict my exemption to 35. But when it will come to investment in the scheme, no one is crazy to invest 40 in the scheme, when if you invest 35 also, you can make it 0. Think about it. Think about it. Come to these figures. If house has to be purchased, this is cost of the house. But in this temporary arrangement, you are not buying the house. You are only keeping the money in a safe custody of the deposit account. So why you have to put 40? If you put 35 also, will that 35 work for full exemption? Think about it. Ultimately, if you invest the capital gain amount, you are eligible for exemption. Then why invest more than this? In house, you will be investing more than the capital gain amount. But in the deposit scheme, no one invests more than the capital gain amount. Why will I invest? You understand, if I put 35 also, I will get full exemption. So in real life, this investment will be considered as investment in your new asset. And then of course, whichever is lower, but believe me, investment will be lower. Investment will never be higher. It can be equal, but it can never be higher. But then, is this a temporary arrangement? Now what is your duty? Utilize your balance in CGDS. To what? To do what? To acquire the new asset within the section time limit. In most sections, they have given only one time limit. That means you have to utilize within that time limit. But in some sections, two sections, if I have to be specific, 54 and 54F, they have given two time limits. Here they have given 2 years and 3 years. 54F also they have given 2 years and 3 years. Then when they say section time limit, if there are two time limits, we will wait for the second time. Because one thing do you understand? At the end of these 2 years, if I am not made a purchase, I can't be considered as a violator, as someone who has contravened, because in 1 year still construction is possible. Correct? Hai? So we will wait for the second time limit to get over. Utilize the balance within the section time limit, because at the expiry of time limit, the unutilized balance will become your taxable capital. At the expiry of time limit, the unutilized balance will be considered as taxable capital gain. And this capital gain will be long term or short term? Why? Because 3 years expired. It will depend on type of asset. If that asset was long term in 54, then this gain will also be long term, because long term, short term depends on type of asset. This, ladies and gentlemen, is your concept of CG Das, that is capital gain deposit account scheme. Everyone is with me? So this means you, individual each. What great thing you have done in your life? Transfer of a residential house, which was a long term asset. You want exemption? Then do what? Acquire another residential house. वो correct है? Where? In India. Exemption will be given of maximum 1. But once in a lifetime, if your gain is up to 2 crore, then we can give you exemption of 2 houses. In any case, next to each other will always be considered as 1. What is the time limit? Purchase 1 year before, 2 years after, construct within 3 years after. And what is the quantum of exemption? Investment or capital gain, whichever is lower. Everyone is with me? However, you can't sell your new house within 3 years, up to 3 years. And if you sell, then gain exempt earlier now becomes taxable by reducing from cost of the new asset. And then before the due date of return filing, use CGBS facility. The time taken for section 54 is a big investment, because you know what is now going to happen. Supposingly, I talk about 54B. The asset that you are transferring will change. So will my heading change? Yes. But my internal points, my point number 1 there also is, who is this assessing? That section is also for individual change. Which is the asset transferred? In 54B, it can be long term or short term both. What to do? Acquire another agricultural land. Means here I have to invest in house, there I have to invest in agricultural land. How much time limit? There is also time limit given there, 2 years ka. Means, are you observing that the head points are remaining same, only the answers are changing? Assessee, asset transferred, then how to get the exemption, what is the time limit, are the headings remaining same? Answers are changing. That's the only difference between 54 and the other section in the range. The asset which is transferred, the heading of the section will change. The assessee will change. The type of asset, long term, short term, that will change. Which new asset you have to acquire, that will change, and time limit will change. After this, the head points to still continue to remain same. How much is the exemption that I will get? What is the lock-in period? What if I contravene? NCGDF. Bro, you know what? I will be saying A, assessee, and give you the new answer. Asset transfer, give you the new answer. How to get? Invest, give you the new answer. Time limit, and give you the answer. And then I will say E, F, G, H, same. Quantum, same in all sections. Investment or capital gain, whichever is lower. Lock-in, same in all sections. Contravention, same in all sections. CGDS, same in all sections. Means head points, all 8 will remain same. And E, F, G, H, the answers also are same. The change will be only in point ABCD. That also heading is same. EFGH, same. In all sections, they are same. Only asset transferred, asset acquired, and time limit, etc. are changing. EFGH, everywhere it is going to be same. Head points as well as answer, which is why I have played a smart game. I am very smart, I know that. You also know that. But do you observe? Is quantum same in all? See, your time limit is different. So ABCD I am not discussing. What is absolutely same? EFGH. I have not written LTCG or new house. I have written capital gain or new asset because this same statement is applicable for 54B, D, C or lock-in. I did not say new house. I said new asset cannot be transferred. Point G though does not refer to anything, but then yes, I have written new asset. And CGDAS also, if you observe carefully, I have nowhere mentioned house. Because CGDAS is also applicable for all the sections. In fact, while doing CGDAS, I was telling you that in 54, we have 2 time limits, so we will wait for the second time limit. 54B, you have to purchase new asset within 2 years. Only 1 time limit is given. So I make investment here, and within 2 years, I have to buy that agricultural land. If 2 years over, it is contravention. Unutilized balance will be taxable. There is no second time. Are you understanding? Everyone? So ladies and gentlemen, believe me, if you have studied 54 properly, so the remaining sections will not even take total of half an hour. All of them will get over. And of course, with which the only concept remaining in the chapter will be capital gains on stock market. Once we do this, we are done with our capital gains chapter. In all probabilities, tomorrow we are completing capital gain. In fact, thank you for the opportunity that, sir, without questions, we can start IFOS also. This opportunity, if at all will come to me, it will come only for your kindness. That, sir, wow. Don't answer a single question on any concept, and we actually will be able to start IFOS tomorrow. So don't revise and come, please, so that we can finish our syllabus fast. Okay? Your generation does reverse, no? So I am saying don't revise and come. But I am telling you both. If you answer my questions, I am doing questions of capital gains. If you don't answer my questions, I am doing IFOS. Both ways benefit. Questions I am doing, then also benefit. And IFOS I am doing, so syllabus also getting over fast. That also benefit. All benefits are yours only. Correct? Hai? So revise or don't revise, I will not even tell you. Okay? You have 45 minutes to watch reels in the class. You may continue to do so. Everyone is clear? Any doubts? Those online? Hey? I will see you guys in the next